Call this meeting to order and we'll open with a roll call.
Thank you, Commissioner Stephanie Garcia Richard,
I'm here.
Treasurer Laura Montoya, EFA Secretary Lee Props, Nick Tass, Present, Catherine Allen,
Present.
John Bingaman, here, Kelly O'Donnell,
Here.
Alan Sanchez,
Present.
Kurt Summer,
Here.
Mary Roman.
Here.
That's at 8 present. We have a quorum.
Okay, next we'll move to approval of agenda. Do we have a motion to approve today's agenda?
Move we approve the agenda as presented.
Okay, I have a motion by member Summer. Do I have a second?
Second.
Second by member Bingaman. Any discussion on the motion? Hearing none, let's take a roll call vote on the motion to approve today's agenda.
Commissioner Stephanie Garcia Richard.
Yes.
Nick Tass,
Yes.
Catherine Allen,
Yes.
John Bingaman,
Yes.
Kelly O'Donnell,
Yes.
Alan Sanchez,
Yes.
Kurt Summer,
Yes.
Mary Roman.
Yes.
Motion is approved.
Okay, next we'll move to a motion to approve the minutes of the April meeting. Do I have a motion?
Move approving.
Okay, we have approval by our investment committee chair, member Bingaman,
Second.
and a second by our audit committee chair, member Tejas. Any discussion on the motion? Hearing none, let's take a roll call vote to approve the minutes of the April meeting.
Commissioner Stephanie Garcia Richard,
Yes.
Treasurer Laura Montoya, EFA Secretary Wayne Props,
Yes.
Nick Tass,
Yes.
Catherine Allen,
Yes.
John Bingham,
Yes.
Kelly O'Donnell, Alan Sanchez,
Abstain.
Kurt Summer,
Abstain, I wasn't present.
Yes.
7 in the affirmative. Motion is approved.
All right, we're gonna turn it over next to our state investment officer with his report on agenda item 2A.
Thank you very much. Good morning, Madam Chair and members. You can see clearly there are a lot of items on this agenda. Some of the items are re-ups and we will be particularly brief on those, but I've asked everyone giving a presentation today, whether it's staff or someone external, to be very brief in their remarks and their presentations so we can try to get through everything in a reasonable amount of time. I do want to highlight, you have updates to 3 charters on the agenda. It's under governance matters on section 4. There are proposed updates to the charters for the Governance Committee, Investment Committee, and Audit Committee. The reason for this is the Investment Committee is in need of a new advisory member now that Mary Roman is a full SIC member. And as we were going through that process of figuring out how to bring another advisory member on board, we recognized we needed to make some updates, not just to the Investment Committee charter, but to the Governance Committee charter as well. And at that point, we also recognized a number of opportunities to clarify and fix some things across all 3 committee charters. All 3 of those charters were taken to their respective committees and then recommended to the council for approval. I also want to highlight that with a couple of job offers that are out there that have been accepted, we are now at 41 staff. So really pleased with the hiring we've been able to do. Again, a lot of that goes back to the pay bands the council approved last year that were a great step towards becoming competitive. I also want to highlight Kristen Vrella will start June 8th. And so she will be with us at the June SIC meeting. And we're going to try to keep that agenda short because we want to have a very brief meet and greet between Kristen and council members who haven't gotten to meet her yet before we get started with the actual meeting. So we'll send details on that soon. With that, Madam Chair, I'm happy to stand for any questions.
Questions for the SID?
How's your space team?
Madam Chair and Mr. Sommer, so we are at absolute maximum capacity at both spaces. We need to get a new building in both locations, both the Santa Fe and Albuquerque locations. When we got the Albuquerque location, That was right around the time that I started and we were staffed at 22. And now being at 41, we have far too many people who want to access that space than can. We have more people who want to be in both offices than can. So we have a situation where people want to spend more time working in person than they're actually able to. We're having to off desk. And we're prioritizing positions that are necessary to have in person, but we're working on getting additional space. Both of our leases are coming up.
You could,
Anything more? Thank you, sir. Okay, we'll move to agenda item 2B, and here's short staff briefing from Director Dunn and Director Lofton.
All right, good morning. So, brief update on geopolitical, macro, and what's going on in the markets. The conflict in Iran, the ceasefire has persisted more or less. It seems over the weekend and today that we're getting closer to an agreement to end the conflict in some form or fashion, and that would likely lead to a gradual reopening of the Strait of Hormuz over the next couple of months. So that would be a positive. Because obviously the geopolitical has really, the conflict has had a big negative impact on some of the macro indicators. So inflation in particular, we saw inflation jump to nearly 4% from the low 2% range. And that was obviously gas prices being up 30%. But we've also seen big jumps in groceries, rents, and airfares rose sharply from the prior month. Real wages, we saw decline. So real wages, basically year-over-year wage increase adjusted for inflation. We saw real wages decline for the first time in 3 years. So consumers' purchasing power is certainly being impacted and their wages aren't keeping up with inflation. On the positive side, for the first time during the Trump administration, we saw non-farm payrolls rise by greater than 100,000 jobs for consecutive months. As we've discussed here, the jobs data has been very up and down, positive 1 month, negative the next month. So it's nice to see 2 months in a row of positives. It's the first time we've seen that in quite a while. 2 months doesn't make a trend, but it seems to be a bit of an improvement, and we'll see what happens over the next few months. In terms of markets, public equities have been really strong in spite of the conflict in Iran. The S&P 500 is now up 10% year to date. The NASDAQ is up 13%. International markets are up about 12%. The Magnificent Seven is up about 6%. So we're not seeing that same kind of Mag 7 leadership like we've seen over the last few years, where there's a bunch of outperformance within that small group of stocks. It's a little more bifurcated now between the winners and perceived losers are falling behind a little bit. So we see Nvidia and Google with really strong performance year to date, up 15 to 20%. But we see, Facebook or Meta and Microsoft, which are down 5 to 10%. So some weakness within that group, some strength within that group. And overall, the reason the market has been able to perform so strongly in spite of some of these headwinds is the AI CapEx boom that we've been experiencing and we've been talking about here on a pretty regular basis. And we really saw that in first quarter earnings. So the expectation, and so looking at the S&P 500, the expectation going into first quarter earnings reports was to see 10 to 12% earnings growth. And what we actually ended up seeing post the reports was 25% earnings growth, which is a huge kind of beat and raise quarter across the board. So the impact of AI CapEx is just getting stronger and it's spreading through the economy. So we're seeing more broad-based strength. Last time I had the analogy or was comparing this CapEx boom to the railroad CapEx boom in the 1870s. I have another analogy this time. So this year, the expectation is that hyperscaler CapEx will approach $1 trillion. And by comparison, the American Recovery and Reinvestment Act of 2009, which was the post-financial crisis stimulus, that was an $800 billion stimulus package. So I think another way to think about the AI CapEx is as a form of stimulus for the broad economy. And it's, just for what's going to be spent this year is roughly equivalent to the financial crisis stimulus package that was put in place back then. I thought it was also interesting. I also wanted to point out another thing that I thought was interesting as we think about this CapEx boom relative to like the .com boom and bust that we experienced almost 30 years ago. So back then, Cisco was the largest market cap company in the world. Today, that's NVIDIA. And when you look at those two stocks, how they were performing, how Cisco performed back then to how NVIDIA is performing today. So back then, Cisco was growing at its peak about 60%, growing their revenue about 60%, and trading at 130 times earnings. Today, NVIDIA, as the largest company in the world, is growing 85% and trading at about 22 times earnings. So we're seeing faster growth at a much lower multiple. So that's obviously a good thing. And the thing to always keep in mind when we're talking about a CapEx situation like this is it's called a cycle because it's cyclical and it will come to a stop. And for Cisco, when it came to a stop, they went from growing 60%, and in a matter of months, they were declining 30% year over year, their revenue growth. And the stock went down a lot, obviously. And we'll see something similar at some point with this CapEx cycle as well. But at the moment, the CapEx it's exceeding expectations. It's actually accelerating. So we currently don't see any signs of it slowing down. And it's broadly been very positive for the economy and for markets.
Roger.
Your challenge.
Yeah. So as far as the credit markets are concerned, I think I can sum it up is financing conditions are still relatively supportive, but valuations similar to the story that I've given the council for the past few meetings. Valuations are rich. If you look at investment grade, we're still near the tight end of the range for the past 12 months. But then as we move down into high yield and loans, overall the averages show that credit spreads are still rich or tight, but that as you go into those markets, you see greater dispersion. In the high yield market, you're looking at double B spreads that are around 200 basis points. You're looking at triple C spreads that then jump about 500 wide. So definitely a big jump into those credits that really the world can foresee are in this higher rate environment, this higher overall cost environment. They're gonna have difficulties, and the markets are pricing for that. In the leveraged loan market, the market's still functioning really well in the sense that you still have great demand for a product out there, but once again, you're seeing dispersion from the averages. When you price software loan spreads, you're looking at something that are I think for the mid 700s. But then you go to non-software, you're looking at spreads that are in the mid 400s. So the market's from a liquidity standpoint and a demand standpoint, things look really good, but absolutely there's dispersion where there's a differentiation between good credits and bad credits that are going on. And that's going to lead to further dispersion, frankly, in my opinion, to manager performance as well. With that, I'm going to stop there.
Questions?
I have a question for SAL Clark. At what point, I know we're working on technology and it's a big issue for the SIC. At what point are we going to be able to push a button and say single stock positions across the board, the entire portfolio?
So, Madam Chair and Member Roman, we have two phases left of our database systems to be able to do that. We're trying to implement both of them simultaneously. We're undergoing contract negotiations right now. Our goal is to have the contract completed and in place by July 1, and then have both of those systems up and running by the end of Q1 of 2027. So by that point, we will have a complete holistic view across our whole portfolio, and we'll have the ability to run customized reports coming out of that system.
Thank you.
And for public equities, we can see that, we can see that through our custodian. We can also see it through, we utilize Bloomberg Report, which is their analytics system, so we can see it in there as well. So for example, NVIDIA.
Yeah.
6.3% position across the whole portfolio. As you guys know, the domestic portfolio, we're largely passive. So NVIDIA is the largest company in the world, is a big chunk of the index. Yeah. So if you ever have any questions about what we know, we're happy to, we can easily disclose that.
There was a report about a year ago that we saw at the investment committee that showed their top 10 positions.
Yeah.
For instance, Bank of America was one that was a surprise. It would be helpful to see
Yep.
our
Yeah,
largest
we can,
positions.
yeah, we'll make a note of that and share that with you guys at the next investment committee.
Madam Chair, just for the sake of clarity, that's 6.3% of the 20%, right?
Yes,
Gotcha.
yes,
So,
of the domestic portfolio. Yep.
understood.
Hearing no more questions, we will move on. Thank you.
Thanks.
I'm gonna hear our March performance report from Mr. Carbonino and RVK agenda item 2C.
Thank you, Madam Chair. Good morning, everyone. We do have your first quarter executive summary for your review today. I know some of that will feel a little bit dated given where we are and all that has happened. It's been a bit of a volatile ride, but we did want to put some of that into context as you look at it. We did see quite a bit of volatility so far this year. I think you'll see that come through in the numbers. Your portfolio is one that is designed with that type of environment in mind. It's not built to be sort of a one-trick pony that only does well when markets are on a tear. You're really built to have performance that is sustainable through different market conditions, and I think you'll see that continue to play out. And as you've heard from your asset class directors, we've seen some of a recovery, but I would say it's generally a bit volatile, a bit fickle in terms of sort of the bifurcated nature of that recovery, and so the type of exposures that you have, I think, will continue to serve you well. Try not to repeat what you've already heard, and maybe give you a little bit of a slightly different flavor on that. On page 10 of the executive summary, we have just a one-page overview of the capital markets conditions as of Q1, so March 31st, and I think they are one of the big themes, of course, that we know was the conflict of Iran and what that entailed. And really what we saw coming out of that or coming as a result of that was a massive increase in the price of oil. You can see that if you look at the economic indicators, the second from the bottom, WTI crude oil went from under $60 at the end of the year to over $100. We're still right around there. Some days appear to be over $100 a barrel, some are below, and as we've heard, that's really pushed through into the inflation numbers that are now at a 3-year high, the 3.8 that you had Director Dunn mention. So, but what that also led to that higher inflation was some higher interest rates, and you can see that on the bottom right-hand side, that yield curve, and compare the green and the blue line, but that's the quarter-over-quarter end of year versus more current. And that really created a bit of a stagflation scare. And stagflation scare, when you have inflation moving up, but potentially some lower growth is actually an environment that is notoriously difficult for most capital markets. Again, you have exposure to lots of areas, lots of different factors that will tend to do reasonably well in this type of environment. But didn't say that that's an environment that's difficult to invest in. And as you look at your performance, the public markets certainly struggled in this first quarter. Again, a lot of that has been recovered in the weeks and now going on months subsequent to that. Second quarter shaping up quite nice. Most of the losses that we're seeing in the first quarter have been fully recovered and then some. But again, I think it's good to have that type of diversification that you built into the portfolio. You'll see as you look at that, most of the public markets in that first quarter struggled with private markets. And again, some of that is mark to market and the timing of that. But even on an accounting basis, you're getting a little bit of a smoother ride as part of that. The only other item that I'd mention there is again, the energy prices have had a pretty big impact, not just inflation, but also on the commodity index, which of course includes energy. We're still waiting to see, obviously you feel the pain at the pump and recognize that, but as was mentioned, that inflation's been somewhat isolated. Other parts of the inflation index, CPI or even PCE, have moderated some, so it's to be seen whether that inflation will persist. I will say at the beginning of the year, there was pretty significant expectation from the Fed to lower rates, more so this year. At this point, would be terribly surprising if inflation persisted. We actually saw no rate cuts or perhaps even a rate hike. So that has bond market certainly on edge, and something that, again, I think will be difficult to predict, particularly at this point in time, but for certain will create some volatility through the rest of the year. So in the interest of time, I'll stop there. Marcia's going to go through the performance, and then we'll be happy to take your questions.
Thank you, Madam Chair. Take you first to page 11, where we'll just talk briefly about asset allocation. This page is looking at the asset allocation of the three largest funds. These three funds make up 88% of their total assets, and they each continue to have an interim target. Simply because this is a lot of money, it takes a while to build up those larger allocations to private assets. So you can't get there overnight. So these three funds are the ones that have interim target allocations. The remainder of these pages through 12 through 15 look at the allocations for the other funds, and they are all at their not at their long-term target, but their target is their long-term target, and you can see they're very close to within their ranges for each of those portfolios. I will take you next to page 16 and look at performance again. This is as of March, so it is taking a look back. And on page 16, you'll see the land grant was down 0.17%, fiscal year to date 6.36%. If you look at down that quarterly column and the fiscal year to date column, you'll see some different, obviously different returns. You have 7 different allocations that you have for these funds. Some of the funds have a high growth to as low as enhanced liquidity. So there are differing allocations for these funds. You'll note just who were the winners for the quarter and for the fiscal year to date, and for the 1-year period was Conservation Legacy, a smaller fund. But I want to note that the allocation for that fund is growth, which is the same long-term target allocation as the land grant. So diversification is working. Your 3 largest funds just aren't at their long-term target, and it will be a while before you can get those private allocations to their targets. So I just wanted to point out that the allocations are working. Page 18, and this is on the calendar year to date basis, showing contributions and distributions for 2026. You can see the numbers, just under 1.4 billion in contributions and over $500 million in distributions so far this year, and you can see that by fund. Page 20, since this is a quarterly report, we do show ranks. It is not an objective to beat your peers, but it is interesting to look. And again, this is looking at land grant on page 20 and looking at its ranks against the peers. Again, pointing out the land grant is not at its long-term strategic allocation, but even with that said, you can see the rank for the land grant fund versus peers for the quarter was 37, so well above median. For the 1 year, it was at median, 3 years a little below, but going out 5, 7, 10, you're still above median for each of those time periods, which is where you want to be consistently above median. And even not at your long-term target, you've achieved that. Next is briefly on page 22, just a top right-hand chart, left-hand chart, sorry. Looking at a risk return chart, your land grant fund, even not fully implemented, is in the northwest quadrant where you have below median volatility that had above median return for that 5-year period. And the same is true for the 10-year period. Lastly, on page 23, looking at asset class performance, I'll just look at the public show you asset class performance for the public, since you're going to be hearing from your private managers today. Looking at US equity in a very difficult quarter, you actually outperformed the Russell 3000 fiscal year to date as well. Non-US equity, which has done really nicely, outperforming its benchmark. The longer term is flat to the benchmark for the quarter and slightly below below for fiscal year and 1 year. And then your public market fixed income, actually for the quarter, so there's a slight underperformance net of fees, and you have not seen that very much. Your public fixed income has done a really nice job of outperforming its benchmark. And cash return fiscal year to date of just under 3%. And Madam Chair, with that, we'll take any questions that you might have.
Questions for RBK?
It's nice to see everybody here. Welcome everybody.
All right, hearing none, thank you. We're now gonna turn it over to our voting items. We'll start with agenda item 3A and hear from our investment committee chair.
Your Madam Chair, we had a meeting last week of the investment committee and we reviewed all of these items before you today, many re-ups in there, and we did review them in detail and agreed unanimously to recommend them to the council.
All right, so agenda item 3B, voting item SRCP Tactical Allocation Series 26. This is the RIA that call on Director Lofton and RIA's a brief.
Thank you, Madam Chair. So today, we are presenting a re-up to Silver Rock Capital Partners Tactical Allocation Strategy. We're reading this re-up today as the investment period for the vintage 2023 series concludes in June. We are recommending the same commitment size as the prior vintage, vintage 23, including a 100 million fee-free co-invest. This investment is a part of our Fund of One with Silver Rock Capital Partners, SRCP, the Silver Rock Logo Fund, what we called it. Within the Logo Fund, we have two separate strategies, the Tactical Allocation Strategy, which is Silver Rock's flagship capital solution strategy, and a core lending strategy, which is Silver Rock's direct lending strategy. We're recommending that the board or the council re-up for SRCP in the tactical allocation strategy to the series 2026 vintage, because we continue to have confidence in Silver Rock Capital Partners and believe the environment is favorable for this strategy. This is in part based on the fact that Silver Rock has met their stated return objectives to date, and they have exhibited a disciplined deployment of capital. And as I said before, we do believe that the environment, as I mentioned in the credit market briefing, the market is discerning between good and bad credits. There are credits out there that need more flexible financing solutions. And we believe the environment favors this flexible capital. That's why we're excited about this type of strategy that we're bringing. With that, I'm going to turn it over to Mary.
Great, thank you, Tom, and thank you to the trustees. As Tom mentioned, this is a re-up for the SIC. The investment period for vintage 2023 concludes in June, and then we'll be entering the harvest period where you will be getting back both income as well as realizations. So there will be no overlap in terms of the investment period for the strategies. I'm going to quickly walk through the strengths and weaknesses as we've identified them. This will be a refresher for the trustees, as again, this is a re-up. We believe that SRCP has a differentiated sourcing network, largely tied to their background, coming out of a family office where they managed money since 2019 on behalf of an ultra high net worth individual. We believe also their lack of affiliation with a private equity sponsor is a differentiator, and they're able to, and they're identified in the market rather as a friendly and not an aggressive lender. We appreciate that the GP focuses on larger cap names as well. It has strong structuring acumen, and that has resulted in strong downside protection with upside potential. The GP has maintained its fundraising discipline. They've also demonstrated the ability to find opportunities and put money to work across the credit cycle. We also appreciate the diversity of the SRCP team, the fact that they do qualify as an MWDE manager. As identified last time, we do appreciate that SRCP does have meaningful key analysts with Vinay Kumar, the CIO and managing principal of SRCP. We appreciate that the GP has actually responded to some of the concerns raised by the trustees and has expanded and fully separated the business management and investment management responsibilities. Also, from a concern perspective, we do recognize that Series 2023 has limited realizations. However, we would highlight the longer term realizations of the strategy and the strong performance track record associated with that. With that, I'm going to turn it over to the GP to make their comments.
We'll make them very short, I promise. So I'm Andrea Wicki. I am president of SRCP, and with me is Vinay Kumar, who is our chief investment officer. We'll ask you just to simply look at page 4 and page 5. Again, this is a RIA. In April of 2023, the Investment Council committed to the SRCP's tactical allocation strategy. As the team has suggested, we are concluding our investment period and we'll be entering into our 3-year harvest period. We ask a continuation of the investment program, which we would, while realizing and returning capital from the Series 23, we will then deploy Series 26 in this capital solutions strategy. On page 5, you can see the returns. We are comfortably meeting those returns, and page 6 is the page itself, sorry. We are meeting and we will exceed those returns as we begin returning the capital during this time period. Maybe Vinay can give a few comments just on the opportunities that we see for both realizations and investments, and any other questions that the council members might have.
Sure, just building on Mr. Luffin's comments. I think the environment is well set up from a deployment perspective. Certainly geopolitical volatility as well as inflation and growing concerns in capital markets about financing various businesses do provide excellent opportunities for the strategy. Having a bespoke viewpoint on how to finance is a real strength in this environment, and having dry powder is also a strength. So we're excited about the forward outlook. Additionally, the robust equity market performance this year and sort of in the last 2 years is giving us a window in monetization. So we're seeing a lot of money come back as well, which you should expect to see in the 2023 vintage also.
Please.
Madam Chair, just looking at your schedule of investments, there are a lot of project names on there, which I understand, many of the companies might want to preserve confidentiality. Are there publicly disclosed investments that you're able to talk about in terms of, specific borrowers who you've supported that people in the room may be familiar with?
Unfortunately, these are private credit investments, and so we do enter into non-disclosure agreements. As the council is subject to FOIA and other searches of that, it would be in breach of the contracts. We'd be happy to discuss them with you, and from that standpoint, but to publicly disclose those private relationships and bespoke financing solutions would be a challenge to those ideas.
Okay, understood.
But we understand your concern.
Yeah, and we were being, and you brought this up in the credit committee as well. With the treasurer, we've had separate meetings with the treasurer in the past to go over strategies in more detail. And as Ms. Wolke mentioned, we're more than happy to talk through some of these in a separate meeting. And I think you'll find that many of the examples are really compelling stories.
Great.
In your private quarterly reports, you also receive full write-ups on each one of them. Terms and discussions.
Okay, yeah, I don't think we received those, but
You don't, but if you, like I said, if you would love to see that movement, we can walk through it with you.
okay, maybe you could send an next one just so we're aware of it. That'd be great.
Mhm.
Great.
Thank you for that question.
Thanks.
I would just like to point out the efforts that Tom and team have had on identifying some of these investments that are very advantageous when you look at the management fees that we've discussed a lot on this council. Management fees are, a focus, and being able to do these re-ups with very favorable fees for the taxpayer, I think it's really important to recognize and appreciate you being able to look at that and negotiate around those terms. So more of a comment than a question.
Thank you.
Further questions? Or comments? All right, hearing none, do we have a motion?
Sure, Madam Chair, based on the recommendations of the Council Investment Committee, advising the HEDA, SIC staff, and general fiduciary oversight of RBK, I move that the State Investment Council approve a total commitment of $550 million to Silver Rock Robo Fund LP, subject to continuing upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Second.
Okay, we have a proper motion and a second. Any discussion on the motion? Hearing none, we'll take a roll call vote.
Commissioner Stephanie Garcia Richard.
Yes.
UFA Secretary Wayne Props.
Yes.
Nick Tass. Yes. Catherine Allen.
Yes.
John Bingaman.
Yes.
Kelly O'Donnell.
Yes.
Alan Sanchez.
Yes.
Kurt Summer. Yes. Mary Roman.
Yes.
That is 9 in the affirmative, motion passes.
Thank you.
Thank you.
Thank
All right, next agenda item. C ampersand 2026, we'll call up Director Cassidy Anderson.
Good morning, everyone. We have 7 investments this month, so I'll move pretty quickly to them. 2 of them are new relationships in the National Private Equity Program, and 5 are in the Strategic Venture Capital Program. Most of these are all managers that many of you are aware of, and we've already made an investment in the past, so they're largely re-ups with a couple of exceptions. The first investment's a firm called Ampersand Capital Partners, who are recommending a commitment of up to $75 million to their Ampersand 2026 Limited Partnership Fund. This is a group that invests in the picks and shovels of the healthcare industry. When drugs or devices are developed, they pitch people that need to actually make them, and these guys invest in the companies that make them. It's a way to basically, I think, invest in the healthcare and life science innovation ecosystem in a way that's less area, the drug development. And we obviously have some investments in the biotech space that invest in those things directly. These guys produce investment companies that invest in the picks and shovels. This is technically not a new relationship, but that SIC invested in their 2001 fund. But that's so long ago, I don't think anybody on staff was even here then, so we kind of consider this a relationship. That's all Richard can.
Thank you, Madam Chair. Yeah, that 2001 fund did very well for the SIC too, generated a 17% net IRR and a 2.6 times net multiple, just for reference. Ampersand is based in Boston with offices in Amsterdam and London. We really like the firm is led by an experienced team of 6 general partners who average 16 years at the firm and over 20 years as investors and operators. The firm continues to be led by Herb Hooper, who's been at Ampersand for 24 years. The firm's had very little turnover, which I think speaks positively to the culture of the firm. They've also undergone leadership transition smoothly over time. And the firm also augments the investment team's expertise with a network of operating partners and executive advisors that assist across the investment process and can be active in helping to monitor portfolio companies. The firm's strategy is really strong across the investment process. They have a sourcing engine led by a group of 5 business development team members in addition to the investment team. The firm's presence in both US and Europe is important to the strategy, not only for sourcing companies in both geographies, but for helping those companies expand into new geographies internationally. Looking at performance, the 4 more mature funds from 2006 to 2018 are all in the top quartile. And overall performance across all of the 2006 and after vintage years have exceeded the public market indices as well. And we're recommending an up to $75 million commitment to Ampersand 2026. I'll turn the time over to the Ampersand team. On Zoom.
Herb or
Great, thank you. Can you hear us okay?
yes.
Wonderful. Well, thank you for your time today. I'm Herb Hooper, managing partner. I'm here with Dana Niles, our chief operating officer and CFO. As you know, Ampersand we're raising our 12th fund of $1.5 billion. We've known Chris and the New Mexico team for a number of years. We've had time to develop a relationship over those years, and we're very excited about the opportunity to partner with New Mexico. The team there really understands what we do and how we go about it. Just to say a few words about our approach and why we think it's an exciting time to be continuing our strategy. We focus. We're a specialized healthcare investor, as mentioned by Chris. We focus on the picks and shovels of healthcare, or we call it industrial healthcare, really providing mission critical tools and services to the innovation ecosystem within healthcare. That being, the biopharmaceutical industry, the medical device, diagnostics, laboratory testing, drug development. Those are the customers. So it's a business to business model. We're not investing in new drugs or making biotech type of binary bets where we're subject to regulatory binary decisions. Rather, we're investing in companies that supply the necessary tools and services, typically technically operationally complex tools and services. So there are moats around these companies where we can come in either as a majority or minority partner to an entrepreneur or a closely held company or a corporate carve out. And we do a lot of value add, value creation, buy and build, transborder transactions. As mentioned, we have offices in Europe, and about a third of our capital in an average fund gets allocated to companies headquartered in Europe. So you'll see in our value creation case studies a lot of transatlantic value creation strategies. Our differentiation really is our long history of experience and depth and networks in the sectors that we target, the number of entrepreneurs that we've worked with, the number of executives that we've worked with. That really sets us apart when we're talking to new prospects. And it's the strategy and the execution and the continuity of the team that has resulted in the performance that has exceeded the public market benchmarks for healthcare, as well as the private market benchmarks over many funds. So at this point, I'll turn it over to Dana just to talk a little bit about performance.
Yeah, hello. Dana Niles, Chief Operating Officer, worked with Herb and the broader partner team here for over a decade. Strong, consistent performance at Ampersand. Post the 2001 fund have continued to generate strong performance. Our most recent fully realized funds, which were AMP 11 and AMP 14, generated over a 3x and a 4x net respectively in those two vintages, and then continued to perform well. AMP 18 is 2018 vintage fund with over a 2x. That was our 9th primary fund, and have since invested our 10th and 11th primary funds in AMP 20 and AMP 23. So consistent performance across the board. What I also like to highlight is our continued alignment of interests with limited partners. We have a unique what we call extreme European waterfall, where we return 100% of subscribed capital to our LPs plus a preferred return before we receive carried interest. We also have a history of waiving management fees early in the fund life as we invest the fund and increase the invested capital. Typically in the first year to year and a half of the fund life, we're not drawing our full 2% fee. We do not charge for services of our PAT team and other services that we provide to our portfolio companies. So just continue to align our interests with limited partners, and look forward to partnering with New Mexico.
Thank you. I'll open it up to any questions from the council.
Very good.
Chair, based on the recommendations of the Council Investment Committee, advised of Minister, SIC staff, and general fiduciary oversight of RBK, I move that the State Investment Council approve a commitment of $75 million to Ampersand 2026 Limited Partnership, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Second. Okay, we've got a proper motion and a second. Any discussion on the motion? Take a roll call vote, please.
Commissioner Stephanie Garcia Richard.
Yes.
DFA Secretary Ryan Fox.
Yes.
Nick Case.
Yes.
Catherine Allen.
Yes.
John Dingman.
Yes.
Kelly O'Donnell.
Yes.
Alan Sanchez.
Abstain, possible conflict of interest.
Kurt Summer. Yes. Gary Rowan.
Yes.
Saving the affirmative, motion passes.
Okay, and thank you to the managers for being online with us today. Next, we'll move to agenda item 3D, Valiant Peregrine Fund 3.
So this is also a proposal of a new relationship in the National Private Equity Program on the growth equity side. Valiant is a growth equity firm. It's a spin out of Valiant Capital Management, which is a long short hedge fund. Where Danny Peruvian was a founding partner around 15 years ago, actually 20 years ago, practically. That was a hedge fund that did invest in private companies, and he decided to spin out to invest exclusively in private companies. They make investments around the Series C or Series D stage, which is why we categorize it as a growth equity fund. But we think this is complementary to some of the other positions in the growth equity portfolio, which are a combination of growth buyout, other types of late stage venture and biotech crossover. We think Valley would be a nice addition. And it's an interesting addition given the original background is part of the public equity hedge fund.
Thank you. Thank you, Madam Chair. So Valiant Peregrine is another new relationship in the national program we're presenting today. The firm manages a growth equity strategy focused on consumer and technology companies with a global focus. The founding partner, Danny Peruvian, launched the firm in 2019 under Valiant Capital, which is a hedge fund he was part of. Prior to founding the firm, he was making private investments in that hedge fund, so he had a prior track record before founding this firm. And totally has over 25 years of investing experience and is supported by a team of 4 investment professionals. We elected this firm, even though it's a smaller fund size than what you typically see, they have a lot more resources having access to the part of down capital. Which includes research and back office support. The firm is focused on investment themes, and then they identify companies within those themes. And, as part of the diligence process, references spoke very highly about Mr. Peruvian's involvement as an investor in their company, particularly around preparing for IPOs and strategy initiatives such as acquisition, debt strategy, or operational projects. The firm's first fund ranks in the top quartile, including on a distribution basis, even though it's still relatively new, showing the firm's ability to generate realizations early on in the fund's life. And Fund 2 is still early in its life. From a terms perspective, there is a large general partner commitment, which really sets up strong alignment with limited partners and the investment team. And we're recommending up to $50 million commitment to Valiant Peregrine 3. I'll turn it over to Danny Peruvian.
Thanks. And thank you, Madam Chair and the council for having me here today and for your consideration. So I was a founding partner at Valiant Capital, which is a public investment fund in 2008. I was doing both public and private investing there for about 10 years before starting Peregrine. What led to that was really my excitement around the growth asset class and seeing a number of companies that were going public much earlier, waiting longer, developing a lot more value, and growing in the private markets and really wanting to focus on that asset class. That's what drew me to starting Peregrine. The strategy is building a concentrated portfolio of 10 or so leading tech and consumer businesses per fund. We're a smaller fund within the growth landscape, which allows us to be nimble in terms of how we access these companies at the best prices. And we have a big focus on being disciplined around valuation and downside protection. It's a big part of our strategy as well. And within the broader consumer and technology focus, we go very deep on themes at any given point in time and really try to identify leading companies within themes that we're excited about. That's how we source our investments, and we have a couple of themes now that we're really excited about for Fund 3.
Thank you. Question, council.
I have a question, Madam Chair. Right now, with 50 million out of 350 raised, we would be somewhere between 15 and 20% of your fund. And this is something we talked about at length at the investment committee meeting. So if you were not to raise that much in this tough environment that we're in, do we scale back on a pro rata basis so that we would never represent more than 20% of this fund?
Yes.
Thank you.
I'm sure I'd like to say hi to Mr. Peruvian. I think we may have crossed paths back in Spain working on the Ono transaction.
Oh, wow, yes.
We were working with Soren and.
Amazing.
Yeah, I
Yes.
was working for Josh. In any event, could you talk a little bit about the downside protection, sort of how you structure that? Is that like a convertible preferred stock that you typically structure, or how do you achieve that?
Yeah, there are a number of ways that we go about it. Certainly via structure and the security that we're purchasing is one way. My bias is more towards really just investing in high quality, more mature businesses that have really clear product market fit, are almost always profitable, generating, investing at a good multiple of cash flow and earnings. I've been through experiences where having a senior security doesn't fully protect you when the rubber meets the road and when things don't go right. But if we can pick really high quality businesses, that's the best way to get downside protection.
Thanks for that.
Yeah, good to see you
as well.
Further questions? Okay, hearing none, do we have a motion?
Chair, based on the recommendation of the Council Investment Committee, Advisor Mercer, SIC staff, and general fiduciary oversight of RBK, I move that the State Investment Council approve a commitment of $50 million to Valiant Peregrine 3 LP subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Second.
Okay, we've got a proper motion and a second. Any discussion on the motion? Hearing none, let's take a roll call vote.
Commissioner Stephanie Garcia Richard,
Yes.
DFA Secretary Wayne Props,
Yes.
Nick Cass,
Yes.
Catherine Allen,
Yes.
John Bigley,
Yes.
Kelly O'Donnell,
Yes.
Alan Sanchez,
Yes.
Chris Summer,
Yes.
Mary Roman,
Yes.
it's 9 in the affirmative, motion passes.
Thank you for being with us.
Thank you very much.
All right, agenda item 3E, Abundance Fund, Fund 1, which is a reallocation.
So, as a reminder, at a high level in the strategic venture capital program, there's kind of basically two types of commitments at a high level. There's actually three, but I kind of think about it in two buckets. There's kind of normal fund commitments with managers and deep pipeline stack and the stack that provide really kind of a massive pipeline of opportunities for the state. And what I mean by that is those managers in aggregate generally cover most of the most important companies in those areas. And advocate on our behalf to hopefully have some of them operate here. In addition to that, they also look at companies in New Mexico as part of it as well. What we've done as well, in addition to that, to kind of increase increase the ecosystem and really trying to make it a little bit more effective is what we call company creation and attraction engines. The first one we did back in November of 2022 was a group called Grogan Venture Studios, which was literally working with scientists to build companies from scratch. That is one model. And you'll hear from another group that is doing something more similar to that, APC today. But what we're finding also works really well is this idea of a company attraction engine, where people like Abundance are going out and systematically trying to recruit companies together with our other partners to operate in the state. And that kind of combination of those two things, where we have connectivity to all the best VCs and deep tech, climate tech, and defense tech, as well as some folks kind of acting as the glue in terms of when these companies come to New Mexico, help with, all the introductions they need to make a positive decision to work here. So Up Abundance is one of these company attraction engines that we've renamed much later after we had recognized what was working. In November 2024, we made a commitment to partners of 80 million in aggregate across 3 vehicles. One was their Up Ventures early stage venture capital fund. That's a traditional fund commitment where we're a part of the fund. And then the other 2 that we did was Up Abundance, which as well as something called Up Labs, which is going to be more of a company creation engine working in partnership with a corporation. For a number of reasons, they've decided to not move forward with that strategy. It proved pretty difficult to implement in New Mexico particularly. But I think also there was a recognition on both sides that the Up Abundance model is working kind of better than any of us could have expected. And so they've been off to a really strong start with originally a $20 million commitment. They've already invested in 11 companies. And if you ask around companies about them, they're just some of the most helpful people in terms of helping companies navigate New Mexico and make a decision to be based here. What else? I would point to slide or page 263 just so you have a sense of kind of what the decision is here. With a larger commitment, when we made the commitment in November 2024, because it was such a small fund, some of the fees were front loaded to allow them to make the investments in terms of setting up an office and getting operations going. They've agreed to revise that down with a larger amount. Some of the needs that they thought they originally have proven less important, like massive physical space. Generally, the companies they're engaging with want their own physical space. They don't want an accelerated committee. But they do plan with this increased commitment to hire a couple of folks, one based in New Mexico and one likely based in California, to help them basically recruit companies. So that, and in summary, this is a reallocation of the original Up Labs commitment to increase the abundance commitment from 20 to 46 million. And that's why we determined our reallocation. Hopefully I didn't miss anything. Listen, you like to say more or?
Yeah, I mean, we're not increasing the aggregate level of commitments to partners, it's just simply reallocation from Up Labs to Up Abundance, which is their New Mexico focused fund. We really like what they've done there and the progress that they've made, we're excited to continue partnering with them.
And I think before I pass it off to the up team, I think, this is also coming full circle. Both Ben and Brian worked at one of probably the most prominent startups in the history of the state called Eclipse Aviation, that unfortunately didn't work. So you guys were both Purdue graduates, correct? And had lived here, and Brian been living back home with his wife. So they had a connection with the community 20 plus years ago. And it's kind of come full circle in terms of coming back to New Mexico, where they originally started with Purdue's out of Purdue.
Thank you, Chris. Madam Chair, members of the council, thank you, and thank you to Chris, Bruce, and Richard and the entire team for the partnership over the past 18 months. I'll start by saying the most important thing I think I can say to the council today, that the Up Abundance strategy is working, and the strategic venture capital program has changed the game for New Mexico. I want to update you on our progress and how in just the last 2 years, in our opinion, New Mexico has become one of the most compelling places in the planet for deep tech startups to scale. We committed $20 million to Up Abundance in November of 2024. Ben Marcus, David Alman, and I made you a promise. We said we would go find the most ambitious deep tech companies in the world. We would win the right to invest alongside some of the best venture capital firms on the planet. And we'd help those companies realize that building in New Mexico gave their business the best chance to succeed. A year and a half later, that's exactly what is happening. We've now made 13 investments, a couple since that first memo was written. Every single one of those companies has made a commitment to do more in New Mexico than before they met us, and many of them are already doing so. Pacific Fusion is building a $1 billion, 200-person fusion research and manufacturing campus in Albuquerque. Astro Technologies relocated its headquarters here. Reliable Robotics won one of 8 FAA advanced air mobility selections in the entire country, and the proposal was led by the city of Albuquerque. Zanstar repowered the Lightning Dock geothermal facility in southwest New Mexico. It's now the most productive pump geothermal well in the country, and they're eager to do more here, and the list keeps growing. These are not concessions. These are companies that chose New Mexico because they came to understand it was going to be the best place in the world for them to scale. Let me give you a sense of how fast this is moving. Just 8 months ago, David was at New York Climate Week, and we heard a few people talking about New Mexico, a quiet murmur. At San Francisco Climate Week last month, everyone was talking about New Mexico. And here's the thing, we're not waiting for founders to find us, we are going to where they are. Our February event we hosted at the Up Abundance office in Santa Monica was, to our knowledge, just gathering top tier venture capitalists, top founders focused on building from New Mexico. 50 startups, 50 VCs, including DCVC at Outlander, who are in the room with us today, 10 New Mexico officials, all in one room. Every single person in that room walked out understanding that something truly extraordinary is happening here in New Mexico. So what's the buzz? What are the founders actually saying? They're talking about capital, $1.9 billion of strategic venture funding, looking for companies to back right here, many than any other comparable program in the country. They're talking about access, 3 national labs, Heartland, White Sands, Spaceport America. They're talking about partners, a governor's office that picks up the phone, an economic development department and legislature that move fast and clear the path. They're talking about non-dilutive funding like JTIP, VITA, technology-specific programs among the most competitive in the United States. They're talking about clean energy. New Mexico has a more clean energy potential than anywhere else in the country. Capital, access, partners, non-dilutive funding, abundant clean energy, all in one state, all moving in the same direction. Now, let me be clear what this is. This is not typical state-level economic development. We are calling this nation-sized industrial policy. To find a peer, don't look at another U.S. state, we look at the United Arab Emirates. New Mexico can and is becoming the land of abundance for industries that will define the next 50 years. We're speaking to why we are ready to expand our partnership. When we built our original plan at this council, we projected 19 investments over 3 years. The deal flow has been so much stronger than we anticipated that we're on pace to hit 19 in roughly 18 months, 2 times faster than we originally planned. With this additional commitment, we'll extend our investment period to a full 3 years, build a portfolio of 33 companies committed to New Mexico, and as Chris mentioned, add 2 people to our team, a venture platform lead based in New Mexico to help companies build here, and an investment professional in California to be on the ground with founders every single day. The challenge is no longer finding great companies. The challenge is deciding which of these great companies coming to us makes the most sense for New Mexico and will generate the largest financial returns. This council can continue funding incredible programs like free college and free daycare. We have a chance right now to do for deep tech what no other state in America is doing. The abundant strategy is working, and we can do so much more. Ben, David, and I are thankful for your time and partnership. We have to trust. Thank you.
Thank you. We'll take questions. Hearing none, do we have a motion?
Madam Chair, based on the recommendation of the Council Investment Committee, Advisor Mercer, SIC staff, and general fiduciary oversight of RBK, I move that the State Investment Council approve a reallocation of the previously approved $26 million commitment to UpLabs Fund 1 to Up Abundance Fund 1 LP, subject to contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Second. Okay, we've got a motion and a second. Any discussion? Hearing none, if we could take a roll call vote, please.
Commissioner Stephanie Garcia Richard,
Yes.
DFA Secretary Wayne Props,
Yes.
Nick Caius,
Yes.
Catherine Allen,
Yes.
John Bingaman,
Yes.
Kelly O'Donnell,
Yes.
Alan Sanchez,
Very happy to vote yes.
Chris Allen. Yes. Mary Roma,
Yes.
it's 9 in the affirmative, motion passes.
Thank you all.
Thank you.
Thanks for what you're doing. Agenda item 3F, Outlander Fund 4 and Outlander Opportunity Fund 1. One's re-ups, one's new.
So recommending two things, a re-up to Outlander's early stage fund. And a new fund series, which is an opportunity fund. They're raising their first opportunity fund, so we're recommending up to 30 million to their early stage fund and up to 20 million to their opportunity fund as a new commitment. Outlander invests really early. It's called pre-seed, but there's not much there. There's pretty much a founder and a business plan and not much else. And it's a different skill set to invest at that stage because you're making a bet on a human being. The Outlander will tell you about their process to make those determinations, but they see over 5,000 founders every year to try to find the best folks across the country. We think they're among the best at pre-seed investor in areas where New Mexico has strength. 42% of their Fund 3 companies have hardware manufacturing components, roughly a fifth are dual use or defense technologies. And they have significant exposure to all things New Mexico has a chance to win at, which is robotics, advanced manufacturing, energy systems, etc. They're kind of widely viewed as it's probably the best early stage investor at this early in the stage in defense tech, which is why we're excited to continue the relationship. They made an investment in one Santa Fe-based startup, and multiple other companies are actively exploring operations in the state. Part of the reason we want to invest in the opportunity fund as well is to provide some of those companies considering operating in New Mexico an additional financing vehicle. You think about a pre-seed or a seed fund, it usually takes a while before they get to the point where they're actually scaling in the state. So we're trying to provide that whole capital supply chain from the beginning to the end if possible. Pass it on to Richard from
Thank you, Madam Chair. So Outlander 4 is the Outlander Opportunity Fund is the new fund for the Strategic Venture Capital Program. The way to think about the Opportunity Fund is the firm's raising that to target additional investment in strong performing companies in Outlander's 4 funds. And we continue to be excited about this manager in the Strategic Venture Capital Program. They've delivered financial performance so far. And with the Opportunity Fund too, there's potential for their existing portfolio companies to expand into New Mexico with operations. As Chris mentioned, Outlander focuses on technology companies and software or software-enabled hardware sectors, and they focus on themes like artificial intelligence, manufacturing, defense, space, and energy. The firm is led by managing partners Paige Craig and Laura Craig, who are married. We did look at potential conflicts as part of the diligence process, and we're comfortable with the protections that are in place with the firm. Both actually have strong reputations in the industry as well. Paige Craig has a strong reputation as a venture capital investor. Laura Craig has a strong operating experience and has worked with multiple venture capital investors. And both referenced very well when talking to portfolio companies and other venture capital investors. From a strategy perspective, one of the key differentiators that they're going to talk more about is the founder framework assessment. This is a 20-point framework to evaluate founders and management teams in 4 different areas. And when you think about the pre-seed stage, I mean, that's the founder is the key thing to actually to look at. And so a lot of the company's success will rely on the founder. The firm's prior track record is strong with many metrics in the top quartile. So we're recommending up to $30 million commitment to Outlander 4 and up to $20 million to Outlander Opportunity Fund 1. And I'll turn the time over to Outlander.
Fantastic. Thank you so much for welcoming us back. We're excited to be here and very excited to see many of our co-investors in the room. So we'll talk a little bit about Outlander's core strategy, which is that we lead at the pre-seed stage, which means that we are going in and we're writing a very sizable check at literally day 0. So when we meet founders, they're coming to us with an idea and pretty much nothing else. They may think that they have a minimal viable product, something very, very early, but really it's at that inception stage, the idea. And why are we able to go in with so much conviction, with so much confidence and write that lead check and take usually 10 to 20% ownership in this company? Is because of our proprietary founder framework. So what this is it's 20 key human attributes. What it's not a personality type or a personality trait in terms of your Myers-Briggs assessment. It's not about where you went to college or who you know, did you work at Meta, did you look at Goldman Sachs? But it's really about how the founders are fundamentally wired. It's a really, really unique and unusual process building a multi-billion-dollar company in a 10-year time frame. And so we're looking for people who are wired in the right way to do that. And so we take founders through a multi-stage interview-based assessment where our team is actually trained in 21 different elicitation or interviewing based techniques to understand them on these 20 key human attributes. And these are things like, are they impatient, which is actually really fundamentally important? Are they good at prioritization? Do they have real fortitude? Are they risk takers? These are all of the things that are really, really critical if a founder is going to build a really, really big business in a really short period of time. And so, of course, part of that assessment is there a founder to problem fit? So if you've spent your entire career in fashion and commerce and all of a sudden you want to build a deep tech business, we're going to have a lot of questions as to why that is. So part of our founder framework assessment in terms of that vision and that execution. So the 4 categories are vision, intelligence, character, and execution are combining that founder to problem fit. And then of course, is that problem a venture capital problem? Can this founder build a multi-billion-dollar business in that sector? Through using this assessment, we haven't found 1 or 2 or 3 multi-billion-dollar companies, but we've backed 18 multi-billion-dollar companies and soon to announce 2 more, which are coming out of Fund 3, which you all backed. So very exciting traction out of Fund 3. And so what we think is really exciting about the founder framework is that it also allows us to identify talent in non-core tech destinations. So finding talent in New Mexico is really exciting for us. So looking at the New Mexico universities, looking at the national labs, looking at some of the defense units, I think that there's a really unique opportunity for us to use that proprietary founder framework to identify early stage talent here, fund them at day 0 and lead that round. They can come out of an accelerator program. We've done a lot of partnership with Antler, for example. We can write that $1.5 million to $2 million check. They really get that business off the ground, and then they can be off to the races. We are excited to also launch our very first opportunity fund, which gives us the opportunity to double down into our very best companies. So at the core fund, we lead at pre-seed, which means that we're writing that first check at day 0. And we have some reserves to be able to follow on in the round immediately following that. In the opportunity fund, the strategy is very straightforward, which is that we are doubling down into a very select number of our very, very best companies. So $150 million going into 10 to 15 names across the portfolio. And this is really at kind of Series A stage. To Chris's point, it's about as these companies start to scale. We have some really extraordinary Fund 3 companies that have been spending time with the Economic Development Director, Mr. Rob Black, and having meetings about setting up operations in New Mexico. And some of these companies have already received funds from the Opportunity Fund 1, and others are about to. So these are the types of businesses that, as they're scaling up manufacturing operations, looking to expand their headcounts, you know, they can't build these types of businesses and continue to grow in places like San Francisco or New York City. They need the resources, and whether that's unique talent, unique natural resources of places like New Mexico, which is why we're so excited to continue in the partnership. Outlander has had, you know, pretty extraordinary track record, with 2015 being our most mature vintage, 11x net TVPI with 6.5x net DPI, and all of our funds continue to mature at a very exciting pace. Paige, maybe you want to jump in and talk about some of the themes we're excited about in Fund 4 and how they're also relevant to New Mexico strengths.
Yes. Honorable Chairman, City Council members, thank you very much for this partnership. It has been incredible. And I say incredible because the feedback from our founders. We did invest in one founder in Mexico. We also have an exciting company, Royce, that produced a laser weapons platform to defend against drone attacks. And these two brilliant young guys were convinced, they're from Detroit, that they would eventually leave San Francisco and build up in Michigan. But of course, you know, we're using the Rob, and they've been looking around the labs and the talent in the state. We've had that happen with other defense and manufacturing companies. So it's an amazing partnership. We really thank you for your trust. What we look for, as Laura said, is we look for people. What I learned in the Marine Corps and the intelligence community is you can give everyone all the tech in the world. If you don't have incredible people, you have nothing. Now we've taken that, we've built a process to find incredibly unique founders across this nation. And we firmly believe, in our data shows, that those unique founders come from places outside San Francisco. We fund San Francisco, we fund Boston and great cities like that, but we also invest across this nation in 20 different cities. The themes right now are largely driven by where we at the general partner level feel the world's going. We think that they're in the beginning of a massive renaissance around industrials, manufacturing, frontier technology, and physical AI. And New Mexico is at the heart of it. With defense and space and industrials and manufacturing talent here, we expect to be working with all of you for decades to come. The things that drive me beyond the people, I really think that autonomy and physical AI is going to be one of the biggest drivers of society. You think about how we move things, how we build things, how we build homes and food for our citizens, for our people. That's going to affect every facet of their life. And it's really exciting funding companies who aren't just building software. Right? We're funding people who build robots married with technology that provide new capabilities for the world. We're also investing in AI platforms that enhance human capability. We don't think that we're walking into an era where the world's going to be disenfranchised, that people won't have jobs. We think this technology, like other technology revolutions, will actually enhance human ability. We're very much focused on our country's national security, both internally and externally. And we are not a defense fund. We think ideally the technology that we fund today will stop conflict, stop wars, or ultimately win those wars. And in the very long term, lead to the technology that empowers civilization in the future. All of us today enjoy rockets and airplanes and GPS and even video games, thanks to decades ago investment in defense tech. So autonomy, manufacturing, energy, frontier technology are all themes that we focus on and we're doubling down on in this fund. And we thank you for your partnership.
Okay. Good question. Yes.
Just a comment. I think we're one of the first funds I've seen to acknowledge that AI is going to replace a lot of jobs and that you're seeing an opportunity to help those people become entrepreneurial. So explain how in New Mexico you might help us with that.
You know, I think that there is this idea that with white collar displacement, right, with jobs, AI taking jobs, that is all doom and gloom. But I think there's a couple of different ways you look at that and how we can help in the state. I think that one of it is first and foremost, funding the entrepreneurs who have the ideas to support the businesses that are going to be a critical part of that transition. So that could be everything from marketplaces to new types of SMB tools to different types of ways that you're going to have more creation as a result of people making that transition from being in kind of corporate economies to, we think, more a return to in-person physical industries and smaller businesses. And so I think that there is going to be an revolution around education, trade schools, new creation of small businesses. And so there's funding those companies with entrepreneurs. And then I think that there's also partnership with how do you support people in that work. We're working with several universities and other types of business programs in other places where we help them think about what does a four-year university, for example, look like when you no longer going to graduate and have that $70,000 to $100,000 entry-level job. So I think that there's partnership in terms of white collar job displacement through AI means lots of different things. But first and foremost, what we do best and what we're really specialists at is funding entrepreneurs when they're at that day zero, giving them enough capital to really create businesses that foundationally change things. And that's what we're most excited about.
And I think a few areas also. One is with AI, I think we're going to see companies, and this is not new, not brilliant, but we're going to see companies built by very small teams. And those investors don't have to believe that that person needs to recruit 100 or 500 software engineers to come live in New Mexico, because they don't. Right? You can have small teams with massive output, and that opportunity is available to any state in America. Your advantage is that you are leaning into technology. You're creating all this ecosystem, and you're going to have probably hundreds of founders who are incredibly successful who don't need Cisco to go recruit 500 engineers to build a company. Another area that we're investing in are fully autonomous factories. We just funded one in LA doing phone production, phone for shoes and vehicles and the military. I think New Mexico and many other states are going to have this benefit of small teams in America building locally, but scaling up multi-billion-dollar companies using robotics and technicians to build sometimes lights out factories. And third is, in a world where people start to wonder, I'm not going to have this job. These smart knowledge jobs that disappear are going to force some people to think, I have high agency. I'm going to go build a company. And I think you're going to see that ripple across all of America. One of the responses to jobs, traditional knowledge jobs disappearing, is some people are going to wake up and say, I'm going to start a company. And they're going to realize, we talk about software engineering, they don't need to build 1,000-person companies to build huge companies to have huge impact in the world. So New Mexico is going to have, some of that benefit. We will ideally be the first check into some of those companies, and we will help mentor them to become massive businesses and meet amazing VCs like Up and 8VC and others in this room.
Thank you. Madam Chair, I have a question. So we had invested 30 million with you in 2023. So I understand today we're talking about a re-up and then a new investment in your opportunity fund. Are any of the companies from 2023 going to be part of that opportunity fund?
Yes. Yes, we've already invested in 2 of Fund 3's companies in the Opportunity Fund because we held first close on Opportunity Fund already. So we're already in active deployment of Opportunity Fund. And so 2 of those companies are from Fund 3, and we're about to fund a 4th deal out of the Opportunity Fund. So 3 of the 4 companies in Op Fund 1 are from Fund 3. So we've seen extraordinary performance from our Fund 3 companies.
So that's an example of you doubling down.
Exactly.
High conviction portfolio.
Exactly.
Yeah.
And 2 of those companies are actively in conversations to move production and do business in the state of New Mexico.
Terrific.
Yes.
Thank you.
Further questions? Hearing none, do we have a motion?
Madam Chair, based on the recommendations of the Council Investment Committee, Advisor Mercer, SIC staff, and joint fiduciary oversight of RBK, I move that the State Investment Council approve a commitment of $30 million to Outlander Fund 4 LP and a commitment of $20 million to Outlander Opportunity Fund 1 LP, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Second.
We've got a motion in a second. Any question, discussion on the motion? Hearing none, we will take a roll call vote.
Commissioner Stephanie Garcia Richard,
Yes.
DFA Secretary Wayne Props.
Yes.
Nick Cass,
Yes.
Catherine Allen,
Yes.
John Bingaman,
Yes.
Kelly O'Donnell,
Yes.
Alan Sanchez,
No.
Kurt Summer. Yes. Harry Roman,
Yes.
state in the affirmative, motion passes.
Thank you all. Hey, so. Okay, I need it. No, I was trying to. Okay, so next, we have, HBC Fund 6. And this is a re-up.
So this is a re-up, the SSC approved a $15 million commitment to HBC's Fund 6 in February 2025, which is a relatively small commitment, at the time, probably less than we would have wanted. But I would say probably the more important thing to recall is, we did, and to understand about APC. APC is really one of the most entrepreneurial firms in Silicon Valley. They leave room in all of their funds, roughly up to a third, to actually build companies inside the fund. So that they have a program called APC Build, which Jim Young will talk about a little more detail. But we asked them to consider replicating that model here in New Mexico. As part of that, we committed $100 million to a fund called Offset Fund 1, which is a fund sponsored by APC in association with another fund out of Austin called Overmatch, to build or relocate 4 or 5 companies to New Mexico. They made their first investment in the company, but Jim Young was still with under. But yeah, the reason we partnered with them is they are one of the more entrepreneurial firms in Silicon Valley, and we want them to shine some of that dust on New Mexico. I think that's it.
Thank you, Madam Chair. ABC is an existing manager in the Strategic Venture Capital Program. The commitment in the prior fund is also generating strong performance. We'll talk about performance a little bit later, but many of the funds are generating good performance right now. ABC is focused on early stage venture capital investments in US-based technology companies. These are usually at the Series A or Series B rounds, but may also include seed companies. This not only includes finding existing companies, but as Chris was talking about, the Build program is focused on really kind of forming and creating new startup companies that are incubated within APC, which is a nice differentiation of this firm. The firm's been around since 2015, and the firm now has 11 partners, with all but 5 joining from the previous firm. In addition to the venture capital experience, the team also has entrepreneurial and operator experience, and most of the team is based in Austin or San Francisco. Performance, not only in the funds that the SIC is committed to, but performance has generally been in the top quartile in prior funds, with returns of 18% or greater on that IRR basis. And they've been able to really find a number of companies that have generated more than 5 times invested capital. So we're recommending up to $40 million commitment to APC Fund 7, and time over to you.
Thank you, Chris. Madam Chair, very nice to see everybody again. Thank you for having us, and thank you for your continued support. Just as brief background on APC, I know you know us well, but we were founded by serial entrepreneur Joe Lonsdale, and as Chris mentions, many of our partners are founders and operators by background. And one of the key insights when Joe founded the firm was that, you know, the very best early stage technology investors are people that have built successful companies, and kind of doing that again and again. And it's not enough today to say that you know, I co-founded Palantir 23 years ago because the world has changed so much. And so actually as a core part of our strategy, we are still co-founding and launching companies from within the firm. We're a team of about 70 people at the firm, we have half in Austin, half in San Francisco. I think you all invested in one of our very best funds to date. So ABC Fund 6, which was a 2025 vintage fund, is I think over, you know, the last decade of us building the firm, probably going to be the strongest fund we've had. And we're very excited about the partnership and offset as well, which I think was a lot of the intention and the initial relationship through Fund 6, even though it was smaller to start, really was the intention to have a strategic partnership with the state of New Mexico in a partnership like the offset fund, where we can be very focused on build activities and building out our portfolio companies work here in the state. I think a lot of the areas we're investing in, so you know, probably the vast majority of our work is still software and AI. But we are, I think, humbly, I would say, one of the leading investors in kind of national security and hard tech and this reindustrialization, the renaissance in the reindustrialization of the US, where I think we have a lot of opportunities in our portfolio to build here in New Mexico. And so we're already seeing that play out with the first investment in the offset fund. We're very excited to have closed Standard Electron. I think it was last week or 2 weeks ago, very recently. And so this is a company that provides kind of modular power system that sits behind the grid. It is a seed stage investment, and so I think some of the largest customers in their pipeline are building operations here in New Mexico, and I think, you know, the business will be building kind of power infrastructure that's modular and can scale up very quickly as kind of industrial needs are being built here in the state. Maybe I'll leave it there.
And on Standard Electron, that's actually one of the founders of the company actually was a GP. Actually, Ambler decided to quit his job and create this business. I think for New Mexico, it's kind of an interesting case study on the clean energy side of there's definitely things in the Permian Basin that can be decarbonized that are currently being done with diesel down there that, you know, other way, you know, modular solar and batteries are a way to slowly begin to decarbonize that, which I know is a big push in the state. But also, frankly, when companies are looking to create operations in a state, like, let's be honest, like plugging into the grid is a little bit hard right now. And so it provides another mechanism that's kind of off the grid to be able to provide the kind of power these kind of companies want eventually. I would say initially my understanding is to partner with oil and gas companies in the south to, you know, do some of that work to replace diesel, which is obviously not only has carbon emissions, but got a little expensive with Iran and Strait of Hormuz with some things. And that's kind of the background.
Okay, we'll take questions at this time. Hearing no questions, make a motion.
Chair, based on the recommendation of the Council Investment Committee, Advisor Mercer, SIC staff, and general fiduciary oversight of RBK, I move that the State Investment Council approve a commitment of $40 million to 8VC Fund 7 LP, subject to a contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Second.
Okay, we've got a motion and a second. Any discussion? Hearing none, let's take a roll call vote.
Commissioner Stephanie Garcia Richard,
Yes.
DFA Secretary Wayne Props,
Yes.
Nick Tejas,
Yes.
Catherine Allen,
Yes.
John Bigeman,
Yes.
Kelly O'Donnell,
Yes.
Alan Sanchez,
Yes.
Kurt Summer,
Yes.
Mary Rum.
Yes.
It's not in the affirmative, motion passes.
Thank you for being with us today. Thank you very much. And I named that Fund 6, it was actually Fund 7, right? I cited it.
Fund 7.
Sorry. Okay. Agenda item 3H, AV Fund 5, and this is also a VIA.
So this is Airbus Ventures, so we Airbus Ventures is was originally a corporate venture capital firm of Airbus, the company. Obviously, the European counterpart to Boeing. They originally started as a CVC and are now a independent firm. They're raising what they call AV Fund 5, which would be a re-up. We committed 20 million to their Fund 4 in 2024. And we're recommending another 20 million commitment to their Fund 5. Yeah, this is a group that fits very well with the state's kind of strengths. They're focused now, particularly on U.S. national security aligned dual use deep tech investing. That's kind of a jargon of words, but in terms of where they kind of intersect with New Mexico, they made 2 investments with operations in the state so far. One is a company called QNect, which is building a quantum networking infrastructure called AVQNet in Albuquerque. I will let Nicole describe what that means, because I'm the last person on earth that should be describing that. And the other is a company called Venus Aerospace, which is a hypersonic engine manufacturer that's doing testing at the spaceport. Interestingly, we have multiple companies in the hypersonic space using spaceport. So glad to see that is starting to be utilized by some of the companies in our portfolio. I'll pass it to Richard.
Thank you, Madam Chair. AV Fund 5 is another re-up in the Strategic Venture Capital Program. The firm started as the corporate venture capital arm of Airbus, and that's where the name comes from, Airbus Ventures, but it's largely become more of an independent firm while maintaining a strategic relationship with Airbus. The firm's raised outside capital in Funds 3 and 4. And the firm's focused on aerospace and defense, and the relationship with Airbus and other strategic limited partners is why we started initially looking at the first investment that we made in this. And then the firm had a history of investing in a couple of companies in New Mexico, and they've made those 2 that Chris mentioned. AVQ Net that we highlighted in one of our past performance reports to the council. The team consists of 2 partners based in the US who've been with the firm for over 9 years. We have Nicole Connor here, who's one of those partners. She has a legal background. There's also 3 other investment professionals at the firm. From a strategy perspective, the firm is focused on defense and defense adjacent investments in the fund. They have a wide network to generate deal leads, including other large aerospace firms. From a performance perspective, the 3 prior funds rank above median in most measures. They have 2 investments generating over a 10 times return, which is important from an early stage venture capital perspective, and we look at that. With that, we're recommending a $20 million commitment to AV Fund 5, and I'll turn the time over to Phil.
Thanks so much. Good morning. Thank you, Madam Chair, and the council for your time today. It's an honor to return to the New Mexico State Investment Council. I'm grateful for the chance not only to share with you our vision for the next fund, but also the tangible results of our partnership since your last commitment to our 2022 vintage fund. At Airbus Ventures, we are a deep tech fund grounded in deep domain knowledge. My co-GP, Tumanda Lawan, and I come from the aerospace and defense sector, bringing an engineer's rigor and a finance discipline to our work. Our team of 11, a blend of diverse engineering and financial backgrounds, are purpose-built to do one thing. That's to guide founders on how to build technologies that are relevant to the aerospace and defense sector, and open the door to early, high-impact revenue opportunities for our portfolio. This expertise is why we are more effective at diligence for our sector, and why we've been successful at routinely picking winners for our partners. Our fund is now in its 10th year of operation, with 3 active funds and having invested into 62 portfolio companies. I am proud to share that the fund into which NMSIC previously invested is currently performing in the top 5% of its cohort across DPI, TVPI, and IRR. Consistent performance with our prior active funds as well. As we look to the horizon with our 2026 vintage fund, we recognize that the ground is shifting. Our new investment vectors target the essential mission critical systems required for the next era of national security and economic growth. Contested logistics, the hypersonic economy, cognitive command, bioindustrial sovereignty, sensing, and communication. These are the core technologies of tomorrow, essential to the U.S. administration and our allies. We work shoulder to shoulder with our government partners, from Inkitel to DIU, AFWorks and SpaceWorks, and the relevant agencies associated with those innovation units. We are ensuring our early stage companies are developing the critical technologies our nation needs. But this is not just about global strategy, it's also about local impact right here in New Mexico. As Chris highlighted, we have several of our portfolio companies who have had the pleasure of working within the state. When Venus Aerospace came to Spaceport America with the direct support of NMSIC and the Director of Spaceport, they successfully conducted the first ever US flight test of rotating detonation rocket engine. That's the most efficient rocket engine that's ever been built. This was innovation taking flight above New Mexico soil. We also encourage our portfolio company QNet to apply for the state's 25 million quantum RFP last year with Roadrunner Venture Studios. The result is AVQNet, as Chris mentioned. This is the nation's first open access quantum commercial testbed that spans 25 kilometers. The next phase will connect Albuquerque to Llano via Santa Fe. This is a tremendous opportunity for the state and the local community. This capability is essential for secure communications and positions New Mexico at the forefront of a technology considered one of the most critical bricks of the US government's future. The project's success has anchored QNAP to New Mexico, leading them to open an office and a manufacturing space in downtown Albuquerque, hiring local talent from Central New Mexico Community College, and partnering with Monarch Quantum, which is a newly relocated company to New Mexico to miniaturize their quantum rack, which is called Karina. This is how we build a durable ecosystem, by connecting world-class technology to local talent and dedicated capital. We were really gratified to showcase these high-impact collaborations alongside Secretary Black at our investor conference in Kyoto last year. We also recently hosted a roundtable locally focused on our history of quantum investments and are scheduled to speak at the University of New Mexico's Space Symposium in 2 weeks. We're also joining David Kitson's Compass program in June for even greater collaboration between the national labs, entrepreneurs, and investors. We're thrilled with what we've achieved to date. There's more to do, and we're grateful for the deep partnership and generous support from this community. We're proud to be reconsidered for investment into our 2026 vintage, and we look forward to answering your questions. Thank you so much.
Could you just say in layman's terms, what is QNet? What is that?
Think of it as it enables secure communications. So quantum, they're using entangled photons. So if I go into that, that is definitely not layman's terms. But when you think of what is most required for finance, national security, defense, secure comms is the essential brick for it. So what they've done is built a hardware suite of 5 different hardware products that goes onto existing fiber optic cable to allow for the secure communications to happen across distance. So they have a network in New York called Gotham Q, that's 67 kilometers. AVQNet, which I mentioned, is first open access one, which allows people who are non-academic and non-governmental to access specialized nodes. They also have a network in Santa Monica as well as in Europe. So that's what you're building with their hardware suite. It's allowing secure communications over distances, but you basically just using quantum to do it.
And there's gonna be another one built in Los Alamos.
But that's correct. So the intention is to extend the network for AVQNet. The company is working with local partners in the state. Secretary Black has been extremely helpful in working with this company to help them identify other opportunities. Essentially, it just comes down to getting commitments from different locations within the state to host a node, as well as to then purchase the hardware suite to use the fiber optic cable that's there.
Fiber optics, okay.
Yeah, so there's a couple other nodes that are under consideration, and I'm happy to share more with the committee if you're interested.
Then I have a question, just curious question about, so if you're defense and defense adjacent, the defense part would be Venus.
Sure.
The adjacent part would be the node unit.
So Venus Aerospace is actually a dual use company.
Okay.
Right now, initially, they're focusing on defense applications because the hypersonic market is effectively only relevant at the moment for defense. So think hypersonic drones, hypersonic testing, there's some other capabilities as well. the long-term vision that Phoenix Aerospace has articulated is actually for commercial aviation. So their rocket engine that they've designed as a model to fly from New York to Tokyo in 2 hours. So their longer term vision is actually to go into commercial aviation. For us, we generally invest in dual use technologies, primarily for market-based reasons, that there's more opportunities for them to succeed if they have more markets to sell into.
And then before Gotham and Karina,
Mhm.
how were we communicating without Quantum? What was the predecessor to Quantum?
Yeah. So the internet, right? So we have internet and telecoms, which this is where it's a really interesting parallel when you think about Gotham Q, and that's why I almost think quantum adds confusion to it. The internet was an investment by the US government to build the internet. And this is this next bridge, is being able to build a quantum internet but using existing infrastructure. That's what's the novel capability, is that they've built hardware that you can use not with specialized cryo requirements, but on existing infrastructure. That's why the IC community is so interested in this technology and have partnerships with this company as well. But that's why it's a very unique asset to have here.
Thank you. It's just in terms of, we would be 20% again of this fund, 16 to 20.
They're anticipating to raise more than that,
Okay.
so
Okay.
it'd be less than.
Yeah, we've received interest for increasing the fund size to approximately 150 million.
Okay.
And so the concern would be mitigated with the fund limit.
Thank you.
Further questions? All right, hearing none.
Madam Chair, based on the recommendations of the Council Investment Committee, Advisor Mercer, SIC staff, and general fiduciary oversight of RVK, I move that the State Investment Council approve a commitment of $20 million to AV Fund 5 LP, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Second.
Okay, we've got a motion and a second. Any discussion on the motion? Hearing none, let's take a roll call vote, please.
Commissioner Stephanie Garcia Richard,
Yes.
DFA Secretary Wayne Pops,
Yes.
Nick Tejas,
Yes.
Catherine Allen,
Yes.
John Bingaman,
Yes.
Kelly O'Donnell,
Yes.
Alan Sanchez,
Yes.
Kurt Summer,
Yes.
Mary Run.
Yes.
9 in the affirmative, motion passes.
Okay, thank you for making yourself available. Thank you. Okay, all right, finally, our last investment voting item, we've got plenty more voting items. DCVC, Energy and Climate. This is again a. Could I just take the time to thank whoever's idea the investment summary pages? That's amazing, can we keep it? Like, I know there's gonna be a lot of changes happening, but like.
Yes,
Very
Madam Chair, that was a specific request by the treasurer, and we got some feedback from other members who would be interested, so yes, we absolutely.
I mean, half the questions that we usually ask, I would answer all in this sheet, so I'm very.
And I really want to thank both Dawn and our asset class directors for putting that template together and keeping it up these last little months.
Let's keep it.
So we're recommending a commitment of up to 50 million to DCVC's second climate fund, DCVC Energy Plus Climate 2 of the fund. We committed 50 million to that first fund. We also have an investment in their main flagship fund, DCVC 7. Which is invested in other categories of above and beyond climate or energy related startups, particularly in things like quantum, and as well that fund invested in Pacific Fusion as part of what occurred last year. DCVC is really kind of one of the original OG deep tech investors, so they kind of invest in practically everything New Mexico's good at. Everything from water treatment technology, which has obviously an important tangent in Mexico, for lack of a better word, as well as they're investors in one of the geothermal companies that actually just went public, and I think kind of proved that geothermal has a real way to get financed. you know, we pretty much have every major geothermal, next generation geothermal company looking at the state at the moment, or having loose holdings in the state. I'll pass it to Richard, please.
Yeah, so DCBC is a venture capital firm that started in 2011, really focused on deep tech. They do have multiple lines of funds. They have the early stage funds, the opportunity, which the strategic venture capital fund is also committed to. The opportunity funds, the DCBC bio platform, which focuses on human health and biotechnology, and then this platform focuses on energy and climate tech solutions. DCBC's co-founders, we have one of them here today, are active on this strategy as well as the firm's other strategies. And the energy and climate strategy also has a dedicated team. They have two general partners, Milo Werner and Dr. Rachel Slaybaugh, who both have impressive backgrounds. Ms. Werner is experienced leading deep tech investments as a general partner at Engine Ventures and also served as an operating partner at Coastal Ventures. Dr. Slaybaugh is a former professor at UC Berkeley and worked at the Department of Energy. And the dedicated team has 6 professionals total, but the team can leverage the larger DCBC platform as well. This fund is focused on deep technology investments related to energy and climate. The companies are somewhat mature, where technical feasibility is largely proven when DCBC gets involved, and the company really needs to execute to scale growth, which is what DCBC gets involved in helping them to do. One thing that came out in the diligence process is the technical depth of the firm is really valued by entrepreneurs. So I mean, they really have a deep knowledge of the sectors that they're investing in. From a strategy perspective, even though this is the second dedicated fund to strategy, they've had experience investing in this sector in their prior funds. So this wasn't just something new that they did with the fund. The first fund is currently ranked in the top quartile against the global venture capital benchmark. And then the fund just had a company go public as well. And that company actually had activities in New Mexico. It's a geothermal developer that Chris talked about named Fervo. So we're recommending a $50 million commitment to DCBC Energy Climate 2 and turn it over to DCBC.
Great, thank you, Madam Chairman. And thank you, Council. Thanks for having us back. Good morning, everyone. As Chris and Richard mentioned, we are DCBC. I'm co-founder and managing partner. We've been at it about 16 years. We're just north of 4 billion AUM. We're here today to talk about DCBC Energy and Climate 2. And I'll also say thank you for your support in Energy and Climate 1, which is off to a great start. Hot off the press is 53% net IRR, and it's just approaching a 3x multiple on invested capital for that fund. Still early days, but going well, and in large part underpinned by the Fervo Energy IPO, which recently happened. Fervo has been a terrific result for that fund. It will, at current market prices, will likely return more than the entire fund, entire committed capital of that fund. And what does Fervo do? Just to double click on that, Fervo takes techniques from the oil and gas industry, fracking technology, and uses that to fracture rock and create terrific surface area in most areas in the Western United States, also globally, right now focused on the US. Currently in Utah and up and running in Utah and Nevada with material lease holdings in New Mexico, which is on their go forward development plan. Within about 5 years, Fervo is on track to be putting gigawatts of clean, firm power onto the grid. In addition to just Fervo, DCBC and our companies do view New Mexico as a terrific place to do business for 4 main reasons. One, very favorable political climate, very favorable business climate, terrific education and research institutions. Our companies often partner with the national labs, as well as terrific workforce, and that's in large part from the oil and gas industry. Since we were here last, one of our companies, Aquafortis, in the water space, has located their headquarters here. DCBC has also engaged and backed the Roadrunner Quantum Accelerator here. And also many of our other companies are currently exploring siting manufacturing facilities, headquarters, or other endeavors here in the state. With that, I will say thank you we're grateful for all of your support and look forward to continuing to partner. I'll pause for questions.
We'll take questions from council. Hearing none, let's take a motion.
Madam Chair, based on the recommendation of the Council Investment Committee, Advisor Mercer, and General Fiduciary Oversight of RBK, I move that the State Investment Council approve a commitment of $50 million to DCBC Energy and Climate 2 LP, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Second.
We have a motion and a second. Do we have discussion? Hearing none, let's take a roll call vote, please.
Commissioner Stephanie Garcia Richard.
Yes.
Deputy Secretary Wayne Props. Yes. Nick Cass.
Yes.
Catherine Allen.
Yes.
John Bingham.
Yes.
Kelly O'Donnell.
Yes.
Alan Sanchez.
Yes.
Kurt Summer.
Yes.
Harry Ron.
Yes.
It's not in the affirmative, motion passes.
Thank you. Right, we'll move next to hearing our quarterly performance reports. We'll start with private debt, Director Lofton and then Tina.
Thank you, Madam Chair. That last presentation is great. I'm bringing up the day when I can bring a 53% on our the council.
What's next?
I feel like preliminary and answer.
Today is not that day.
Today is definitely not that day. Just real quickly, I haven't had a chance to be to participate in a panel a couple of weeks ago, and one of the topics on private credit was exposure to software. And I'd just like to note to the council that our private credit portfolio is unique among our peers in its diversification. I don't think in a lot of our peers that a 30% exposure is unusual, especially heavy exposure to direct lending. Because we went down the path pretty heavily of focusing on other strategies, asset-based strategies several years ago, we have a highly diversified portfolio. As the treasurer mentioned in a Bloomberg interview a couple of weeks ago, our exposure to software as a whole, not just SaaS software, across the private credit portfolio is less than 10%, and that is definitely unique among our leaders. So with that, I'm going to turn it over here to talk about actual balance.
Thank you, and I'll keep this quick as well. So just a program snapshot. All of this is as of 12/30/31. I think that's going to be consistent across all the private market performance reports. So total committed amount of $11 billion, a total contributed amount of $8.8 billion, a total distributed amount of $5.1 billion, and an NAV of $5.9 billion. So in terms of performance, as we've presented in the past, commitments made in and since 2023 have generated a net IRR of 12.7% and 6.1% for the vintages prior to 2023. Yield has driven the majority of the returns with direct lending over the 1 year period, and we typically don't report IRRs on 1 year basis, but we do share the horizon analysis and report over that period. Direct lending returned 16.3%. Special situations was the second best performing category with only 11.9%. Strong performance relative to the PME equivalents, as Tom's already alluded to. Strong diversification at the strategy level. Asset-based lending represents 28% of the portfolio on a fair market value. Special sits is 26%, followed by direct lending at 20%. On a year-over-year basis, you made $1.7 billion of commitments across 9 funds, slightly below what was done in 2024 when there was $1.9 billion across 11 funds. 1 year performance already mentioned. Year over year,
portfolio NAV increased from 5.5 billion to 5.9 billion, an increase of roughly $380 million. That was driven by 478 billion of contributions and 132.5 billion in net gains, and that was offset by $249.7 billion of distributions. All strategies were positive contributors to the program at a strategy level. 49 out of 58 funds generated net gains, 9%, 9 funds reported net losses. Happy to take any questions.
This is a hot topic.
Absolutely.
Very hot. And markets anticipating great losses. I mean, so where do you see this portfolio going?
Yeah, we've had a number of discussions with the CIC in closed session with respect to your specific program. I think your program benefits from having limited exposure to the 2021 vintage. So if you look at the vintage years that are expected to and to date have experienced meaningful write-downs, 2021 and early 2022 have been the vintages that have really, to date, have seen the notable problems. That's not surprising if you think back to we were in a zero rate environment and we spiked effectively by 500 basis points over a very short period of time. So those companies didn't have a significant amount of time to grow into their capital structures. So that those vintages are very challenged. The particular part of the market that's also experiencing and likely to experience stress in the software space in particular ties to what are called ARR loans. So those are loans that were made to companies that were not EBITDA positive at time of underwriting. They were expected to, kind of alluding to what I mentioned earlier, have experienced a very high growth rate and grow into their capital structure. New Mexico has very, very limited exposure to ARR lending. That's been a segment of the market that we have systematically underweighted. So in the monitoring calls that we have quarterly with your managers, there have been an uptick in terms of watch list items. And one of the things that we're focused on in particular is the valuations and how managers are valuing out their portfolio. So I think as Tom alluded to, relative to the broader market, I think New Mexico is going to be in strong shape, particularly also because we've been underweight direct lending and have focused more on the asset-based lending sector. So, but happy to provide additional color specific to the New Mexico program in public session.
Madam Chair, follow-up question. Yeah. What percentages of this portfolio is in that category that's risky?
Well, risky is kind of a loaded question.
All right. What percentage of the portfolio is in the area that you just described as being?
I don't have the specific number in front of me. I can follow up with you on it. The ARR exposure is very, very limited.
Yeah, we purposely stayed away from strategies that lent they lent based on the top line as opposed to actual profitability. We had a lot of pitches, but we stayed away from those. Another thing that's in the headlines is that, as the members of the credit committee know, business development corporations, BDCs, they're under redemption. We purposely stayed away from those from the beginning as well, so we don't have any exposure to those type of vehicles as well.
Thank you, Madam Chair.
Additional questions? All right, thank you all so much. Thank you. Director Cassidy, you're back up. Agenda item 3J2.
Well, I'll generally let Richard right here, but just to, to follow on Mary's comments, you're gonna start to see our portfolio behave a little differently in terms of the underlying components. The SIC really kind of re-kick-started a venture program in 2020, which in retrospect was probably just a tad early because ChatGPT came out in November of 2022, but it wasn't a bad time either. And so you're going to start to see some of the venture investments, some of the biotech investments start to perform. Historically, this portfolio was definitely more buyout oriented. Some new things are behaving, are producing gains. We're also seeing correspondingly the disruption in AI is creating pressure on software valuations. So you'll begin to see some valuation reductions over the course of the next year. But as of what we're beginning to see in the numbers is that venture allocation, while it's not particularly large, it's driving quarterly performance and offsetting some of those gains. So at a high level, information technology is the most important sector in private equity and venture. And that's a mix in our portfolio of really kind of growth buyout and venture-backed startups. Using an example, the Anthropics of the world, which is our largest position.
Thanks, Chris. Thanks, Madam Chair. So I'm going to talk through Q4 2025 performance for the national program first. We had a gain in the quarter of 3.1%, which equates to 158 million. I think I want to hit on a couple of themes as I'm going through here. One of the themes is the venture capital performance, because in that quarterly performance, venture was up 12.8%. So it was a very good quarter for venture. When you look at the 2011 and after portfolio on page 4 of the performance report, you can see the 1-year return overall is at a 12.4% for the 2011 after, followed by 8% for 3 years and 12.3% for 5 years. Since inception, we're just under a $5 billion gain on the national private equity program. On the next page, on page 5, you can see that the net asset value increased by 317 million. There was really 2 components to that net asset value increase. One was the increase in contributions. All these commitments that we've been making have driven a larger amount of contributions. And in fact, we had a net contribution in 2025 of 452 million. And so far in 2026, we have 276 million of a net contribution. So that's a theme that should continue going forward, is having more contributions than distributions. If you look at the venture capital return, though, on the year over year from 12/31/24 to 12/31/25, it flipped from being a negative 0.9% to a positive 5%. And there's a lot of history in those active commitments. There's some older venture capital firms in there. But one of the things that drove that was the 1-year return for venture capital was 42% in the national program. And so the venture capital has really been performing strong. When you turn to the benchmarking, which is on slide 8, which compares it to the private market benchmark, you can see that across different vintage years, it's above median. 2022 vintage year, which has a heavy venture capital component, is top quartile across both multiple and net IRR. And then when you look at the public market equivalent as well on page 9, this is another theme that we've been seeing, and you might have seen reports about private equity performance against publics. When you look at it against the MSCI equity benchmark, which covers multiple countries and geographies, the national programs outperformed by 1%. We've seen that narrow over time because there is some of the mega tech in that MSCI equity benchmark. The national program is 1.4% lower than the Russell 3000, which is a US-centric public equity benchmark, which includes the larger companies. But when you look at just the small companies of the Russell 3000, and with the Russell 2000, the national program is above that benchmark by 2.8%. And then the slide that I'll end with is on page 10. When we did the structure study for private equity, one of the strategy components we talked about is not only getting primary exposure through funds, but also seeking no or low fee exposure through principal investment or co-investment type vehicles. And so we've added a slide here to really show that difference in performance between the primary fund investments and the principal investments. And it's still relatively early on the principal investments, but we've had some early traction where those are generating a 26% net IRR versus a 12.1% for the funds. With that, I'm happy to answer any questions.
Questions? Okay, we turn to the next proposal.
So for the Strategic Venture Capital Program and the Legacy New Mexico program, I'll start on page 4, which really kind of starts showing both of the different programs. You know, from the analysis that we did in the structure study, we've split the report into 2 portfolios: the Strategic Venture Capital Program, which began with funds of the 2023 vintage year, and the Legacy New Mexico program, which encompasses all the other funds. And this slide really shows the high level performance for the 2 programs. You can see the Strategic Venture Capital, although it's still early, there's been a lot of early progress. You've heard of some of those managers today that have been driving that. There's a net IRR of 21%, which has generated a gain of just about $87 million to date, but that is largely unrealized at this point, and venture capital returns can be volatile both ways, both kind of on the up and the down. But you know, just for Q1 so far, we've gotten some early previews that we think it's actually going to be higher for Q1 at this stage, but we haven't gotten all the performance yet for Q1. The legacy portfolio has a sizable loss. The net IRR since inception is a negative 2.8%. I think recent performance has been driven by the co-investment funds, which were part of the Legacy New Mexico private equity program. And there's still a sizable portion of the portfolio at 69% of the net asset value of the legacy program. I'm going to skip ahead to slide 6, which shows the performance dashboard. And here you can see the top performing general partner relationships in the Strategic Venture Capital Program. And really all but one is generating very favorable performance. And that one that's not generating favorable performance is a very new commitment that was just made last year. The next page, slide 7, shows the impact of the capital calls on this program. I mean, that's one of the factors that's really driving the net asset value increase of this program is the capital calls. We had in 2025 a net contribution of $268 million, and so far in 2026 through mid-May we've had $149 million of net contributions. Just skipping real quick to slide 13, which is the Legacy New Mexico program here. There's still a sizable amount of value here, $270 million net asset value. The net asset value decreased $19 million, driven by the losses that I talked about. Multiple companies were written down in the co-investment fund in Q4. I think the good news, though, when you look at the IRR horizon performance, the fund investments have actually been doing pretty well. Over the last year, we've had an 11% increase in the legacy fund, and they've generated a positive return of $36.6 million since inception through year end. And then I'll just end on slide 18, which is the economic development reporting. You know, this slide shows the updated economic impact numbers from the general partner with 139 New Mexico-based companies, 11 receiving funding over the last 12 months. A lot of these terms were driven by the legislation of the New Mexico program. We had a good conversation at the SIC meeting about trying to find a better way to report on the economic development now that we have a number of different companies that are not necessarily based in New Mexico, but are all opening sizable operations in New Mexico as well. And so while those might be reflected on the job numbers here, it's a little bit harder to track invested capital when you have companies with operations. So we are working with staff on that to find a better way to report the economic impact to you. That'll conclude my remarks, and happy to answer your questions.
Madam Chair, I have a question. So for the, and this might be for SIO clerk, for Bain Capital being 17%, does that violate our investment policy statement? Which is it 10% there, or 20% of exposure to a single manager? Even though I understand there's multiple strategies under that, it's a single firm.
Madam Chair and Member Roman, no, so the 10% exposure limit is that we can't have more than 10% of our portfolio dedicated to single manager. So this doesn't violate that. We, as you noted earlier, we do invest sometimes up to 20% of a given fund.
Okay, thank you.
And some of it is being social situations, kind of like a unique position in the portfolio that, you could argue that, when Vince was still here, we were actually discussing it, an opportunistic kind of bucket to put it in, because it's, that strategy you can earn probably, 15+% net IRRs with less risk. It's PE light, it's not going to shoot the lights out, but it was a way for us to put a lot of capital to work in a time where it was hard to put capital to work. Longer term, discuss this with Tom, is do strategies like that deserve their own bucket, but that's a discussion for our new CIO. So that's part of the reason that position is larger than normal, is because what portfolio views not about opportunity when you're sitting on a lot of cash as an institution.
Thank you.
Just was hoping you could comment a little bit on what our LPs and even GPs are doing with all these macro level pressures, with really with the Iran issue and AI and all of these things that seem to be really impactful on these investments that we've made in the past, that are long-term investments. They have a 10-year time horizon, a lot of them. What are those GPs doing or LPs doing to pivot and address these sort of new things that have come up recently?
Yeah, so are you looking from the limited partner perspective, the investor perspective on this, or do you want to know what the fund managers are doing?
I guess the fund managers really.
Yeah. Yeah, no, I mean, you're right. The fund managers do have a longer term time horizon. I mean, when they're underwriting investments, they're usually underwriting at least a 5-year hold, but in reality, they're much longer. What's interesting is, with AI has come on fast, and every fund manager is talking about AI and how to implement it, whether it's a technology investor, whether it's a traditional industrial investor. Everybody's looking at AI technology and trying to get ahead of it. There's, which I actually find pretty favorable, because you want these fund managers to be more proactive and not reactive to what's going on in the environment. I think with Iran, I mean, a lot of it is the ancillary effects that could come from that. Looking at higher oil prices, and then what could the impact be on consumers, which then causes impacts on enterprises. A lot of the portfolio that we have, I mean, we do have a global portfolio, but most of our companies are based in North America and focused on North America. But looking at those ancillary effects and seeing, is there something they can do now to potentially hedge any type of impact if this were to be a prolonged situation?
You can't discount AI as how important it is. If you don't have an answer to that right now, it's a problem. It's Mark Andreessen of Andreessen Horowitz went on Joe Rogan on the last week and basically said that AGI is already here. It's just, they talk about it in the Valley. It's what he means by that, if I understood it correctly, is like a lot of these tasks can be done by things like Claude better than 99% of humans. And any of us who played with it, to do things that maybe we couldn't do ourselves as easily, or we didn't have the time and skill sets, pretty astonishing stuff. And so all businesses are going to have to figure out their AI strategy, how to change their business model, re-architect their business. And that's both an opportunity and massive threat for private equity. It's a threat in some ways if you don't react, or if you've invested in companies that are going to be disrupted in terms of business model by this platform shift. Conversely, on the opportunity side, like most businesses are going to have to make this transition in some form, and so that's what private equity is good at. not everybody will get this right. This is a massive change management at the GP level, at the portfolio company level. You need strong CEOs who can push the culture to make these massive changes. It's a big shift, and we're certainly thinking quite hard, like going forward. We're seeing some of our managers that are really making aggressive investments as a firm really go after this, and it's both a threat and an opportunity. And we have some, we see some firms that are kind of like flat-footed. I don't think they realize how big the platform shift this is. Maybe can't hire the talent required to make these changes. So it's a big deal.
And Madam Chair, are you hearing anything from the fund managers that where they're revising their IRR rates of return and things like that? Because when we approved these commitments way back when, we approved them under certain parameters and expected rates of return. What are they doing with that? Are they enhancing? Are they decreasing?
Yeah, I mean, absolutely, there's modifications. I mean, part of it is when you look back at history, 2020, 2021 was a very active investing year. And valuations were high. And so that is impacting a lot of managers because they're trying to figure out, they paid a high multiple for a company. Now you've got disruption coming with AI. How do they kind of re-underwrite that to try to get to their target returns? And some of the managers are just re-underwriting like, we can't get to those target returns. So we're going to try to get the best return we can for investors. But it goes back to kind of the portfolio construction basics that we do at this portfolio where we pace over time because we don't know what vintage years are going to be good or bad when we're making the commitments today. And so we've done that with taking different type of vintage year exposure. So we're not, there's going to be some good vintage years and some kind of poor performing vintage years, try to diversify within the commitments of those vintage years as well. And so try not to get too impacted by that by going big into any one vintage year.
Thank you.
Anything further? Thank you all. Let's say vote.
So, Rob Coaches is joining me to do the PMR for the real estate portfolio. I think the most significant driver over the last couple of years for real estate has been the runoff in the 10-year bond and interest rates more generally. Operating performance across properties has remained quite strong, with the possible exception of certainly the multifamily space, particularly in those high growth southern markets where new construction causes a bit of supply glut and rents are under pressure. More broadly speaking, the rise in interest rates has created some implications from a valuation perspective. Valuations are under pressure. The normal spread cap rates to treasuries is very tight, and that would suggest that the lack of capital appreciation that we've seen in the most recent periods probably will persist for some time going forward. With that, I'll hand it off to Rob for the details.
Okay, good, thanks. I'm gonna start on page 748 in your materials. I think that's the right page number, and just go over a few pages and then most of my comments though are more general about the market. It's a very humble time to be in real estate. It's been a tough slog for a number of years, and we're reporting performance as of year end 2025, so it's a good time to look at 2025 in review. And it was another flat year. It was a positive year for real estate, but just flat. Your benchmark index, the NCREIF Odyssey Index, generated a 2.9% return for the year. Your performance was a little bit above that, but below your benchmark because you had a premium to that NCREIF index. So it was another flat year. You really have to go back to 1990 and the S&L crisis to find another period that's comparable to what we're in today in real estate. And it is, in a large part what Keith mentioned is interest rate driven. There's generally speaking, there's liquidity in the market, there's capital out there for equity investors, or for equity investment. There's capital out there for both traditional debt and private credit is out there, but the problem is the capital is very expensive. And the market has been slow. And I've used at past meetings the analogy of a bathtub shaped recovery or market cycle, I should say. And we kind of dropped into the bottom of the bathtub and we're still bouncing along the bottom. And 2025 was another year. Unfortunately, 2026 with the war in Iran, we've seen interest rates spike again. So every time the rates start to come down a little bit, some other event keeps them high. And I think inflation is high. So I think, 2026 is starting off a lot like 2025. And we're 4 years into a market correction and bouncing along the bottom of the market trough, if you will. So what that means is you've got very slow deployment of capital and you've got very slow distribution of capital. So there's not a lot of transaction activity going on out there. And we think it's a more, the market's shifted to less thematic and more bottoms up. So you want to be a bottoms up investor in this type of environment, looking at, individual opportunities, getting more granular, certain market geographies, certain market segments or property types are doing better than others. But it's really we call it a stock picker's market. There's no big issue driving real estate right now, with possibly the exception of the data center development, which I know you have a lot of that in your infrastructure. You have some of that in your real estate as well, and that will be a theme that continues because there's a lot of data center development. So on page 748, just real quick, your real estate, you have a 11% target allocation to real estate. Right now, your market value is only 6.8 versus that 11. So you're significantly below where you want to be in real estate. And I would say that's probably a good thing because the last few years haven't delivered. So that's one silver lining. And you have, though, you've made you and your teams have been very busy. You've made over $3 billion of new commitments over the last 3 years, but only about 12% of that has been drawn. So most of that is just sitting, waiting to be invested. And those new investments that were made at the bottom of this market cycle are not really hitting your performance yet. You don't have a lot of good drivers in your portfolio yet because the capital is largely sitting uninvested. If you turn to page 749, the next page in our book, the chart on the lower right kind of shows the market cycle that we're in. We had a nice big peak in the market. I remember being here back in 2022, and your portfolio was generating 20+% returns, and saying this isn't going to last, and it didn't. But what's surprising to even us is the length of this kind of market cycle that we're in now. So we had a big peak, a big trough, and now we're just kind of flat. And 2025 is a year. And what happens is over the longer time period, while your performance is above your benchmark, so it's good on a relative basis, it still looks flat relative to other asset classes because you've got such a large market correction in even the 10-year number now. Your portfolio has generated a 5.5% return annualized over the last 10 years, which is not a result to scream about, but was better than the market and better than your benchmark. I would say two other comments. Recall that you did change your benchmark in 2025, so you added a premium because we wanted to tilt the portfolio towards a more value add oriented approach. And hindsight's 2020, but more of that kind of bottoms up approach, more tactical investing. And so you added a premium to go along with the additional risk that we suggested you should take on of 75 basis points over that NCREIF Odyssey index. So right now you're a little bit below your benchmark for the last year, but over the long run you've got a nice premium to that benchmark. And the other comment I wanted to make is that shift is ongoing. So when we last did a structure study in late 23, early 24, you were at about 60% of your portfolio in more core stabilized real estate. And we said we wanted to shift that towards more tactical. And over 2025, you get about a 50-50 portfolio, so 50% of that core stabilized real estate and 50% that's in more of the tactical strategies. So that shift continues, and we expect that to continue over the next couple of years. And it makes sense for you. You don't need cash. Stable core real estate is a good cash generator. You don't need cash. You need growth. And so we're going to continue to see that shift over time towards the more tactical strategies. One other comment that I'll make on page 750 in your book, the chart on the upper right, we talked a lot in real estate about what sectors are you in, so what property types are you in, and each property type has different drivers. And just calling your attention to the this other category that's on the right hand side of the chart there on the upper right, and you're significantly above your benchmark exposure to a lot of alternative sectors in real estate. And if we look at what's generating positive performance right now, those are the sectors where we're seeing very attractive returns. So some of your managers are invested in industrial outdoor storage, which is basically just outdoor land that is used for all kinds of storage purposes. It could be construction materials, it could be trucks, whatever it is. Nichier strategies like that, self-storage is another one. We talked about cold storage, and you have a good portfolio. All of those are generating double-digit returns right now. But the problem is you just haven't had enough invested in those sectors to kind of drive the overall portfolio results up. So the overall portfolio results are still relatively flat. But we expect that to continue, and for an investor in your position where you have capacity for new investment because your exposure is below your allocation target, and there's still some early mover advantage in some of these nichier property types. We want to continue to push capital into those sectors going forward. And so that'll be a theme that you'll hear more about over the next year as we bring some new investments in front of you. So with that, I'll stop there and answer any questions.
Madam Chair, I have a question. I'm just curious about what you're saying about this bathtub recovery, or not a recovery, we're still down there.
Yeah.
So when a Blackstone buys an office building and it doesn't work out because COVID, the remote workers did not return in most cities, like New York has done a great job of reinventing itself. Does Blackstone keep the building and hire people to recalibrate it to apartments? Or are they taking a loss in the portfolio and the next real estate developers coming in and converting to apartments?
Yeah, I would say kind of all of the above. And the conversions have been very difficult because the numbers just don't work. Very expensive to convert an office building to residential. We have seen situations anecdotally, and so the jury's still out. We don't see that as being a big wave for the problem in office. And we had the issues with COVID and everybody working from home. Now you have the issues with AI, and companies don't want to hire because they think they're going to replace people with AI. So that's a drag on demand for office space. So the jury's still out on how that's going to play out, and we haven't seen a pure play strategy in that kind of conversion. You're getting a little bit of that in some funds that are more diversified in their approach, but it's not going to be a big part of your portfolio performance.
Madam Chair, question. Yeah, I noticed on this chart that we're looking at, there's nothing in hotel or very little, which is, I find surprising because hotel rates have skyrocketed.
Yeah.
As an absolute number.
The hotel became kind of a disfavored asset class, and it hasn't really recovered since COVID. It's always been a very volatile asset class. If you think about it, I say asset class sector. If you think about it, the rents in hotels are set on a daily basis. So it's very volatile in terms of it can be very volatile in terms of the cash flow. And COVID hit the hotel sector really hard. And we have not seen a lot of capital pouring back into that sector since then. But I don't disagree. There are some interesting strategies out there. That might be something to look at. and growing that going forward.
Thank you.
Anything further?
Thanks. Hope to be back with some better news next time we present performance.
And our final performance report.
All right, I'm just gonna hand over the controls. There you go. Thank you, manager. Thank you, council members. I'll spend a few minutes just walking through the real assets performance for Q4 2025. And we can jump ahead to page 786. So starting with the performance overview, it was another positive quarter. The program has ticked up to a 7.5% net IRR, largely driven by positive momentum across the subcategories. On the bottom half of that page, you'll see how strong the short-term performance has been over a 1 year, 3 year, and 5 year horizon. On the next slide, you'll see and may recall that 2025 was a very active year, especially when it came to commitment approvals. 36% of the capital was committed to fee advantage accounts. So again, due to a large number of the co-investment SMAs on a no fee, no carry basis, it's expected to blend down the overall fee load across the portfolio. Now, on the next slide, you'll see that quarter-over-quarter, the net asset value increased by 237 million, largely driven by your infrastructure investments. As you know, infrastructure is the largest sub-strategy within the real assets portfolio and has been the largest driver of value. On the next slide, we show the NAV bridge, which is really just illustrating how the net asset value has changed quarter-over-quarter. So in Q4 of 2025, roughly 276 million of contributions, 135 of distributions, and a $96 million gain across the funds. Now, as we've mentioned over the last few quarters, we do expect to see contributions continuing to outpace distributions due to the large number of commitments we've made. The next slide breaks out by fund your top 5 largest contributions, distributions, net gains, and net loss over the quarter. On the next slide, we look at the public market equivalent. Now, the benchmark was one of the changes we made during the structure study in 2025, as we'll be leaning more into the value add space, and we thought it was only appropriate to increase the benchmark from a CPI plus 3% to a CPI plus 4%. And as we've been making more investments in the value add space, it will take time for those funds to generate the returns, but as you're seeing the progress, we're basically there with a 7.5% return versus 7.2% benchmark. And lastly, just want to highlight the diversification of the portfolio. We are in line with where we intend to be from what was decided during the structure study. You'll see on the following slides, diversification based on strategy, geography, and industry. And with that, I'll conclude the remarks and happy to take any questions.
Just one question or suggestion. Have you thought at all about maybe bifurcating the performance similar to how we do in private equity? We have like 2011 and before, sort of legacy investments, and then going forward. Like, do you think the strategy has changed enough maybe since you joined Director Sable, or, you know, because it does feel like we're maybe being dragged down by some of the legacy investments just when we look at that performance.
Potentially, and I think there's some J curve issues involved as well. The unfunded balance is actually quite high at this point. The design portfolio has changed in a couple different ways. One is moving out the risk reward spectrum, as Gurjeet had just described, and also through the course of the structure study, we took on a more broadly globally diversified view. And so to the extent both of those are true, the portfolio does look a bit different than what the legacy portfolio did. I think we can certainly look at doing that application.
Got it. Thank you.
Anything further on council? All right, thank you.
Thank you.
All right, we're gonna move to agenda item 4. And before we get into our charter update votes, Chair Allen, do you have some comments that are
just comments that we discussed this at our last meeting. We what the changes there.
Good afternoon, or almost afternoon, Madam Chair and members of the council. During the last couple of months, each of the State Investment Council's 3 advisory committees met to review and make recommendations on their respective committee charters. The Governance Committee met on May 11th, the Audit Committee met on April 27th, and the CIC reviewed its charter on April 21st. The changes proposed to the committee charters contain several similarities, and all of those are highlighted on pages 801 through 803 in your materials in this chart. And the charters of the Governance Committee and the Audit Committee have some changes that are unique just to those committees, and those changes are highlighted on page 804 of your materials. The committee charters marked with those reviewed changes are included on all the pages that follow. In the interest of time today, I will briefly summarize the similarity between the changes proposed to those 3 charters and the unique charters and unique changes that are proposed for the Governance Committee and the Audit Committee charters. But of course, if you have any questions about any specific proposed change, or if you would like me to elaborate further on any particular change, I'm also happy to do that as we go along. So on page 801, you'll see a table that contains the proposed committee charter amendment summary that shows amendments that are being made to all 3 charters or more than 1 charter. One of the most sweeping changes involves a change to clarify each committee's role as an advisory committee as opposed to a policy making committee. So throughout the charters, you will see changes to replace references to development of policies, to formulation of policies, or any language that might be construed to be as decision-making as opposed to advisory. All of those references are replaced with changes to more clearly express the committee's advisory role and includes references to information gathering and review functions of the respective committees. So those are contained in all 3 committee charters. You'll notice that the committee name for the auditing committee or the audit committee is being proposed to be changed to the Audit and Risk Committee to reflect the risk review functions of the Audit Committee. There is a limitation on SIC committee or SIC member participation in each committee, and you will see that there is a change to the Governance Committee charter to specify that no more than 5 SIC members shall serve as members of the committee. That same change is being made to the Audit Committee charter, essentially to prevent triggering a quorum of the SIC from participating in any one committee meeting. That same provision is already included in the Council Investment Committee charter. The next provision or the next large topic that is covered by each of the committee charters, it was already touched on by John. It is being proposed to include a provision that states that in concert with a comprehensive search process to be conducted by the State Investment Office, the committee may recommend candidates to serve on that respective committee. Currently, the Governance Committee's charter specifies that it is the Governance Committee that makes recommendations on membership for each committee, whether it's the Governance Committee or the CIC or the Audit Committee. This change would put that in the hands of each respective committee, make those recommendations incumbent on each respective committee for each of its respective members. There would also be a provision that clarifies that State Investment Council members may still make recommendations on committee membership to either those respective committees or to the State Investment Council. However, it is the State Investment Council that would make an ultimate determination as to who serves on which committee. On the next page, on page 802, you will see in the table that there is a topic that addresses committee member qualifications. There are changes proposed to the council investment committee, and that would align qualifications of SIC members consistent with the language of section 683 of which is the statute that specifies what specifically qualifies a member to serve as a member of the SIC. It was recommended that council investment committee members should have the same qualifications as anyone who serves on the state investment council, so that language was incorporated. And section 683 states that members shall be qualified by no less than 10 years experience in the field of investment accounting, investment management, corporate governance, investment or investment accounting or finance. In the audit committee charter, there are modifiers also added to align with SIC member qualifications contained in section 683. And there are specific qualifications added for advisory committee members on the audit committee. One member would be required to have expertise in accounting, auditing, or banking, and another advisory member would be required to have experience relative to corporate or government operational risk. The next topic involves committee member removal as opposed to renewal. So members would be proposed, so it is proposed that committee members who miss 4 or more meetings on either the governance committee or the council investment committee would forfeit their membership unless that respective committee votes otherwise. Majority vote of the SIC is required to reinstate a removed committee member. So the SIC ultimately has veto over whether or not a member is actually removed from a committee. That same change is proposed for the audit committee, but the threshold for forfeiture of membership is missing 3 committee meetings. There is a provision added with respect to meeting notices to each of the committee charters. Each would include a reference to 72 hours notice of the date, time, and place of the meeting, and an agenda for the meeting being used and being implemented for each committee meeting. And that is to align with the State Investment Council's open meetings resolution. On the next page, on page 803, there is a reference to changes with respect to the retention of outside experts. Both the governance committee and the audit committee charters include changes that would clarify that the committee may make recommendations to the State Investment Council on engagement of outside experts instead of directly retaining those experts. And that change is made again to align with each committee's advisory role because it is ultimately the State Investment Council that can determine the expenditures that are made from the SIC budget, or unless it's delegated to the State Investment Officer. So now I'll go on to page 804. This includes the changes that are made specifically to the governance committee and audit committee charters. I'll note that there were no unique changes that were made to the council investment committee charter that were not already proposed or made with respect to the other 2 committees. So that's why those 2 committees are highlighted here. The governance committee charter clarifies that an appointing body of SIC candidates is the legislative council as opposed to the legislature. There's a reference about the legislature appointing certain SIC members. It's the legislative council. So that's just a technical change. Under number 2, you'll see that there is a change to generally clarify compensation review and recommendation functions, and that adds a reference to review of New Mexico State Investment Council exempt pay bands. So the governance committee has had a role in reviewing SIC exempt pay bands as of late, and so that function has been added into the committee charter. There's also a clarification, a technical clarification that we are making or proposing to be made because there was a reference to SIO, review of SIO compensation previously. That was meant to refer to the state investment officers' compensation and the governance committee's review of the state investment officers' compensation, not to the state investment office in general. That is covered by the SIC pay bands, SIO, actually. So that's just a clarification. Instead of SIO, State Investment Office, we meant SIO, State Investment Officer. So that technical correction is added. The next change would allow the committee to obtain reports on business and ethics policies more generally from the State Investment Office rather than from only the State Investment Officer and General Counsel. So previously there was a reference in the committee charter that would only allow the General Counsel or State Investment Officer to make those reports. Now it's open to anyone in the office to make those reports to the governance committee. The audit committee charter contains several unique changes. The first would eliminate a provision that states that the state investment officer shall attend meetings as a non-voting member, except where attendance would be inappropriate. The intent of removing this provision is not to state that the state investment officer will not attend these meetings or should not attend these meetings. The purpose in eliminating this provision is to eliminate the reference to the state investment officer as a member of the committee, which creates technical changes or technical issues throughout the charter where members are referred to. So that is just a clarification. Number 2 would conform fiduciary language to section 687 of the New Mexico statutes by referencing the committee's role to ensure funds managed by the State Investment Council and State Investment Officer are protected in accordance with the best interests of the beneficiaries of the funds. This strengthens previous language referencing the committee's role of ensuring the funds are adequately and accounted for fairly. The third change would provide for the committee's receipt of information on the appointment, replacement, reassignment, or dismissal of the chief financial officer and eliminate references, including references to review and concurrence that conflict with the state investment officer's role in section 685 in appointing or dismissing New Mexico State Investment Council employees. So there is a provision in that charter that states that the committee will review and concur in the appointment or dismissal of the CFO, but under statute, it is the state investment officer that does that. However, the committee would still have a role in obtaining information on any appointment or dismissal of a chief financial officer. Number 4 includes a change to specify that only advisory members may participate in evaluation of prospective external auditors. That was a change that was specifically requested at the audit committee meeting, which was added in. The next change would clarify that the committee reviews whistleblower procedures and strikes a reference to policies. There are no specific whistleblower policies in place, but there are procedures, and those procedures could include policies, so that is a technical change that's added. The next change would strike a reference to committee review of commissions paid by the State Investment Council and trading activities, that's stricken because the State Investment Office does not directly engage in trading activities or pay commissions in that context, and so that provision is proposed to be stricken altogether. The next change would strike a function that specifies that the audit committee determines the extent to which the council does or should comply with global performance standards promulgated by the CFA Institute. And we found that's an antiquated provision. The charter was enacted several years ago and is not something that the committee does at this time, so that provision is proposed to be stricken. There is also a provision that would add a committee function that would require the committee to assess training related to risk management. So that expands the committee's role in assessing training that goes along with either staff or the council in risk management. So with that, Madam Chair, I'm happy to answer any questions.
Yeah, I think what we're gonna do is just take questions on changes proposed in general and then take the votes on each of the charters one by one. So let's begin with questions. And I have one, I have two actually. So back to your chart. I just want to ensure on page 802 on committee member qualifications, because the designated members, like the elected members and the DFA secretary, don't have the qualifications. Does that preclude their participation in committees?
No, it would not. So if, for example, those members are ex officio members, so they qualify by virtue of their positions.
SIC members.
That's correct,
Okay.
yes.
Okay. I just wanted to make sure. And I've never heard the term state investment office. What is the state investment office referring to?
So, Madam Chair, that shows up in statute a lot, and it ended up being confusing as we were going through the charter that, when we say SIO, that typically refers to the state investment officer. But statute does actually refer to the state investment office, which is intended to be a subset of the organization. So you are the council, the name of the agency is the council. So in trying to designate what is the function that I directly oversee, it was referred to as the state investment office.
So the staff of this.
Yeah, the staff.
So a question on just the question, the previous question. So does that mean the treasurer who sits on the governance committee actually is not a committee member and we could have another member? Or can she vote on this? I need clarification on that.
So, Madam Chair and Member Allen, the treasurer is welcome to join the investment committee as a member.
Not investment, governance.
Governance. So she is a member of the governance committee. And so she can vote on that. And then as long as it doesn't create quorum issues, any member of the council who is not a member of the committee is always welcome to sit in on a committee discussion.
And she counts as a quorum even though she's ex officio.
Correct, because it's counts towards the quorum of the council.
Thank you.
Yeah, the ex officio, I'm just wondering, unless it's expressly called out, if it's gonna just, be omitted. And so is it expressly called out? It's like all these public members, they have their member qualifications, and so they qualify not only to be SIC members, but to be committee members. I want to make sure the same is with the ex officio members. Because we don't have the member qualifications.
Yeah, so maybe if it's helpful, we can turn to page 808. This is just the council investment committee charter. I think it's the easiest the one to look at with the fewest changes, and this talks about this highlights where we add the requirements of section NMSA section 683. So it says members shall be qualified by competence and experience in the field of investment or finance. That was language already included in the charter. And so now we're adding consistent with the requirements of NMSA section 683. So that's a further elaboration on what's already included in this charter. But the membership, I don't believe this actually speaks to members who are ex officio members. I don't think they're affected by this provision.
Okay.
To be stronger, they are not affected by this provision. The ex officio members are qualified to serve on any committee. Yeah.
Okay.
Doesn't change that.
Okay.
I have a question, Madam Chair, on page 809 for the CIC. I thought it was unusual to have us meet no less frequently than quarterly for an investment council. If we were looking, if we were furniture council, it'd be different, but since we are investment council, is that part of charter to meet no less than quarterly?
That's what's currently included in the charter, so that's been unchanged since, May 2010. So it is an old provision, we didn't touch it because, frankly, the CIC meets every meeting before before the state investment council meets, so it is meeting no less than frequently, but it is actually in practice, you're correct, meeting much more frequently.
Historically, it's very hard to populate committees.
Oh.
And so if we said you have to be there 10 times a year, it would be very difficult at the CIC level potentially. And so it was drafted to not make it an impossible hurdle to get people to serve.
Gotcha, thank you.
And do all the committees have that time frame as well, the no less than 40? No, it's just that off the top of your head, you don't have to, it's fine.
Madam Chair, member, so at least the governance committee, it does not have any requirement for
Okay.
meetings. It is just explicitly the call of either the
Okay.
chair of the committee or the state investment officer.
The answer is no, because governance doesn't meet all the time, you only when you're necessary, and audit is more like a four time a year kind of thing, so it's sort of there and implicit.
The audit committee does have the no less frequently than
Quarterly, okay. Thank you, Amy. All right, so, are there any further questions on the proposed changes? So, I think we should let's go to agenda item 4B and take up the vote, and I don't know if anything more has to be said.
Thank you, Amy.
Yes. So do we have a motion, Madam Chair? Madam Chair, would you like to make a motion?
Okay, I'm sorry. Okay, they find it, based on the recommendations. Let's see, there we go. Based on the recommendations of the Council Governance Committee and SIC staff, I move that the State Investment Council approve updates to the SIC's Governance Committee charter as discussed and memorialized by the council today.
Second.
Okay, we've got a proper motion and a second. Do we have discussion on the motion? And we have to take a roll call vote, presumably? Yes, okay,
Commissioner Stephanie Garcia Richard.
yes.
DFA Secretary Wayne Props.
Yes.
Nick Teas.
Yes.
Catherine Allen.
Yes.
John Bingaman.
Yes.
Kelly O'Donnell.
Yes.
Alan Sanchez.
Yes.
Kurt Summer.
Yes.
Mary Roman.
Yes.
So 9 in the affirmative, motion passes.
Okay, let's go now to agenda item 4C, our investment committee charter update, and Mr. Chairman, do you have the?
Sure, based on the recommendations of the Council Investment Committee and SIC staff, I move that the State Investment Council approve updates to the SIC's Investment Committee charter as discussed and memorialized by the council today.
Second.
We have a motion and a second, any discussion? Seeing none, we'll take a roll call vote.
Commissioner Stephanie Garcia Richard.
Yes.
DFA Secretary Wayne Props.
Yes.
Nick Teas.
Yes.
Catherine Allen.
Yes.
John Bingaman.
Yes.
Kelly O'Donnell.
Yes.
Alan Sanchez.
Yes.
Kurt Summer.
Yes.
Mary Roman.
Yes.
It's 9 in the affirmative, motion passes.
Okay, great, now we have agenda item 4D. Vote on the changes to our audit committee charter, and Mr. Chairman, do we have a motion?
Madam Chair, based on the recommendations of the Council Audit Committee and SIC staff, I move that the State Investment Council approve updates to the SIC's Audit Committee charter as discussed and memorialized by the council today.
Second.
Okay, we've got a motion and a second, any discussion? Seeing none, we will take a roll call vote.
Commissioner Stephanie Garcia Richard.
Yes.
DFA Secretary Wayne Props.
Yes.
Nick Teas.
Yes.
Catherine Allen.
Yes.
John Bingaman.
Yes.
Kelly O'Donnell.
Yes.
Alan Sanchez.
Yes.
Kurt Summer.
Yes.
Mary Ron,
Yes.
nine in the affirmative, motion passed.
Okay, great, thank you. All right, we'll move now to our finance matters, agenda item 5, and hear from our CEO.
Madam Chair, in addition to the regular material that I normally provide, including the budget to actual, as well as the investment holdings report, there's a couple of items that we need to vote on at this time under 5B, custodial bank contract renewal. I just wanted to make a quick comment on that. The JPM renewal memo is on page 876. And I want to especially thank Amy Chavez Romero with all that she's done on this renewal. I know a lot of other people were involved: John, Greg Dunn, Ron Eustace, Don Iglesias, Two Rigs, and we have several people from RBK that was involved in some foreign X transaction fee discussions. So I want to thank them on that. But I think overall the renewal process went very well with JP Morgan, and I'm happy to answer any questions.
All right, so we are now on the vote for renewing the custodial bank contract. Any questions on that vote? We have a motion.
Madam Chair, based on the recommendations of SIC staff and general fiduciary oversight of RBK, I move that the State Investment Council continue its custodial banking relationship with JP Morgan for 4 additional years, subject to and contingent upon New Mexico legal requirements, council policies, negotiation of final contractual terms and conditions, and completion of appropriate paperwork.
Second.
We've got a motion and a second. Any discussion? Seeing none, we will take a roll call vote.
Commissioner Stephanie Garcia Richard.
Yes.
DFA Secretary Wayne Props.
Yes.
Nick Tass.
Yes.
Catherine Allen.
Yes.
John Bingaman.
Yes.
Kelly O'Donnell.
Yes.
Ellen Sanchez.
Yes.
Kurt Summer.
Yes.
Mary Rowland.
Yes.
It's 9 in the affirmative, motion passes. And then finally, and there's no material for this other than a recommendation. I just wanted to give a little history on the external audit RFP. Our Chief Procurement Officer, Rita Sheet, handled this RFP. It's a very extremely regimented process. There's timing deadlines, there's restrictions on who's involved, etc. She handled this process. I was one of 4 people that actually scored the RFPs that were responded to. I estimated initially that I expected 3 to 5 respondents. We actually had 5 respondents to this RFP, with 2 of those being out-of-state respondents. But based upon the scoring that took place during the process, it is recommended that Baker Tilly be awarded the contract for the next 4 years.
Any questions on that?
I'm happy to answer any questions.
Madam Chair, quick question. Was there any change in the fee or the budgeted amount for the new contract?
There was nominal changes in fees. I want to say right now, we pay somewhere in the vicinity of $140,000, and the fees on the renewals somewhere in the 160, so very close to what it is right now. And that includes not only the external audit, but the 4 quarters of agreed upon procedures. And as all of you might know, the state auditor's office does typically post information on past fees, and usually the auditors or the firms that are responding look at past fees and fix the fees on that. So I think we're getting a pretty good deal. If you were to ask me what I'd be willing to pay for an external audit, it'd be a lot more than
You're not
getting on this. What's that?
You're not supposed to say that.
Well, we're restricted.
I'll tell you that at the college that I work for, our contract's about 90,000. That's pretty incredible, because the amount of funds you all manage here.
Yeah, I would point out that Baker Tilly of the firms that responded was the largest firm.
So Baker Tilly is an out-of-state firm?
Baker Tilly is a regional firm with offices in New Mexico. Yes, ma'am.
And then how many respondents did you have?
We had 5. So I expected 3 to 5. Some people expected more. I have to say, I was kind of I was surprised that we hit the max that I thought, but could have been more. But not everybody in the States wants to audit an entity as large as ours. So there's some restrictions there.
And one last one, I'm sure. Well, what year are we in currently with Baker Tilly?
That's a super good question. Baker Tilly has audited us only 1 year, which was the 2025 fiscal year.
Right, and the audit rule allows us to go up to 8 years with one firm, and then.
That is correct. So, assuming best case scenario, they'd be able to do this 4-year cycle. And then if there was another RFP and they won that RFP, they would only be able to do that for 3 additional years.
Thank you.
Any further questions? Do we have a motion, Mr. Chairman?
Madam Chair, based on the recommendations of the council RFP selection committee, I move that the State Investment Council approve a contract with audit firm Baker Tilly LLP to perform the audit of the State Investment Council's annual financial statements for the fiscal years 2026 to 2029, including required quarterly agreed upon procedure of reports subject to and contingent upon New Mexico legal requirements, council policies, negotiation of final contractual terms, and conditions and completion of appropriate paperwork.
Second.
Okay, we've got a motion and a second. No discussion. Seeing none, let's take a roll call vote.
Commissioner Stephanie Garcia Richard.
Yes.
CFA Secretary Wayne Frost.
Yes.
Nick Tejas.
Yes.
Catherine Allen.
Yes.
John Beeman.
Yes.
Kelly O'Donnell.
Yes.
Alan Sanchez.
Yes.
Kurt Summer.
Yes.
Mary Ryan.
Yes.
It's not even affirmative, which passes.
Good, thank you for all your work on that. All right, next we're gonna move to any old or new business or informational items before the council. Seeing none, is there folks signed up for public comment chart?
Not today.
Seeing none, our next meeting is June 23rd, where we will meet our brand new CIO, I believe.
Yes.
So please attend. I think it's gonna be here, and with that, we are adjourned. Thank you.
Thank you so much.